Good morning. Hope you guys had a good weekend. It is Happy Money Monday. We're going to be streaming the stock market, watching stocks, trading futures, options, stocks themselves, looking at the SPY, day trading options on that, watching GME, BBBYQ, AMC, whatever you guys suggest, we'll take a look at it. Be refreshed for a week and had a good weekend. Ready to start out week strong after last week. We do have a little gap down on SPY, down 0.36%. It's like phase is gapped up for some reason. 46%. GME's flat, or that's not GME. GME's flat. BBBYQ's down 4.5. It's just in that same barcode range still, though. Looking like a little tighter, 11 cents and maybe 9 cents now. SPY kind of ripped up there. You have kind of inverse head and shoulders here that formed. We did complete this large inverse cup, and then some actually. So probably due for a bounce. Retrace to some moving averages at least. Maybe a gap fill. I think we're starting to get it today. I did open up a call this morning on that inverse head and shoulders. Before I started chatting with you guys. It's like Nicola's up. How are you guys doing? How's your weekend? Morning, Guts. You're welcome, sir. My pleasure. Sorry for the late start. Morning, Tasty. Morning, Macaron. Barbie, Pulty messing with Barbie boys? I don't think he's messing with anybody. He's just networking. He's made it clear that he doesn't have position in barbecue, so I don't know how I could be messing with anybody unless somebody would be reading into stuff way more than has been put on and has been directly refuted. All right, it's probably still rip rally. Looking to get more. I only got one contract, early morning contracts, but I do want to average into these. I think we've got some serious gap fills and bouncing that could take place in the next couple days. AMC is pretty flat. CGC is up 8%. Let's see. Not seeing any news on phase specifically. Okay, I'm closing that one call. Get back in. Back in on a pullback here. Nice inverse head and shoulders here this morning, followed by a bull flag, followed by potentially another bull flag. Wish I opened up a couple contracts, but only got one. Oh well. Got Joby up 8%. What's going on with this thing? Joby delivers first eVTOL aircraft to Edwards Air Force Base ahead of schedule. Pretty bullish. Well, Maui. Barbecue 1076 up 2.5. The spies almost filled the gap that I made this morning. Run is up 3.8. That is neat. Alright, gap is filled on buy. See if it's just coming up to fill that gap and then we sell off, or if we're going to continue to rally today. We held that call a little bit longer for that gap fill, but oh well. Respecting this resistance line pretty well so far. Dish is flat. Punk goes up a quarter, starting to roll over. How's Kramer doing? Kramer's down 4.4, so I got a good sell in there so far. Got RSI divergence, it's pretty clear now. Look for a pullback to maybe some moving averages. Fisker's down a quarter. Joan. Yeah, Joey's up 9.5. Lucid. Oh, SPY ripping there. More rippage. Ooh, breaking out. The upside of that channel. SPY is now green. Wow. Could take calls there, but I really don't like to. Still going. Palantir's down 0.8%. Rivian's pretty flat. Well, I'm happy about my exit on my puts. term. Oh, did Astra do a reverse split? Oh, yep. The beginning of the end. AMC up 1.8. Oh, that's actually too bad because I heard there was talks of the strike ending. Hollywood writer strike deal lifts movie theater and streaming stocks. Not really. I was expecting a bigger move on that. Respecting that support though on AMC, look at that. I haven't really had a big rally on AMC at all. Next catalyst are when they come out with the numbers for Taylor Swift and all that. How much is liquor down today? 8.5. Cool. Glad I could give a little donation. I see Kai's and Kramer buying tequila? No. Sounds like something AI generated. ACB up 6.5. What's GNS doing? Ah, GNS up 2.5. So GNS actually looks pretty good. A little inverse head and shoulders here, and it's respecting that support. Let's see it on there. I want to get some. Get some. Yeah, I do. I'm gonna get some GNS. Eyes coming down there. Not taking any puts yet. Yeah. Might grab some calls though if we bounce on this channel. Do have VWAP, which is a little further down. I'll slowly scale into calls at the bottom of this range. See if we can hit VWAP. One there. I'm gonna be patient. Does that mean shorts did cover? Bum bum bum. Rapid coding. Grabbing another call. A 5-minute isn't golfing though, so gotta be careful. Not sure if it needs VWAP to bounce, but it might. There we go. There we go. Expecting that channel. I grab another call. AMC's up 2%. I'm gonna be greedy on this GNS fill. I don't know why. Okay, I'm in the GNS shares. Put a stop somewhere down here. You know how it likes to be fickle. Fickle one. See if SPY can hold it. There's VWAP. Break on VWAP and I'm closing these. VWAP break. Dang, dude. Didn't want it. I was trying to grab the bottom there on the calls. Selling one of these calls. Not as certain of a continuation out of the upside, so. GNS up 212. AMC up 2.7. It's a pretty nice bounce on VWAP though. GME. There we go. Not bad. GME's flat. Nicola, why are you up? Nickel's up 8 and this 0.7. When you get back from this channel, I might grab another call again. Okay, I'm selling one. Might be starting to roll over on the top here. You added to liquor? Oh my gosh. Crazy. GNS. Back to that $1. You put my stop on here. There is a gap down there. But I do like the inverse head and shoulders. I like that's above $1. Could have a tight stop. Fills this gap, it's probably not very bullish. Not right now, at least. I might start scaling back into calls here. Nice entries if I can. Yeah, I like them now. Back up in that channel. Just a little VWAP test. I'll see if we continue make a same higher high up here, if it's a lower high. It'll be higher high, but not in the same, not with the same trajectory. Indicating it's kind of rolling over then. Okay. All right. There it goes. There you go. Almost had me on that first break. Wanted to tickle VWAP for a little bit. Had a falling knife before, just once. GME is green. Nice. Building up this right shoulder over here. Left shoulder here is your head. Come back down to VWAP, we're just in a chop. Hold it. Not very nice. Okay, I'm out of those. Dang. It's okay. Now I wait. Maybe take the puts. We'll see. This could be something like this happening. Yeah, we've got Chop. Got Chop on our hands. Only 10:20. You already gonna give it to us? Deposit all of savings in a cash account. Clearing every day, Tuesday through Friday. Oh, we're gonna start trading with cash instead of margin? A margin account. This is what we're working with. There's a new low on SPY. Broke through VWAP. It finds that support there. Could be building an inverse cup here. Break this channel, I might grab some puts. Yeah, I got some puts. I did it. Get some more if we get a bounce back up. Test that support. BBBYQ? Probably not. It's usually the death of stocks. Where it's headed. There's a pretty big bounce back up to VWAP, maybe. Didn't like getting puts at the low there, but gotta do it on confirmation. Alright, I'm getting another one there. We break VWAP to the upside, we're just still stuck in chop. It is 10:30 though. Maybe data coming out soon? 10 o'clock by consumer confidence. That was kind of where that sell-off came, so I'm guessing it was bad. Or maybe it was good. Fed Bowman speaks at 1:30. He could be... It could be a bit of a catalyst for some movement. GTAI up 8.8. Nickel up 6.8. Blue Apron up almost 5. Get my stop on GNS. Okay, I could have a pretty tight one on here.
6.5.
And as a result, employers are increasingly going to say, I don't need as much space as I have. And so when they renew their leases, they're almost certainly going to renew them for less space. And probably because there's going to be less demand, the prices are going to come down for the space as well. You also have the fact that a lot of major buildings in the United States have debt on them by the owners of them. The debt is owned by the banks, but it's been borrowed. And I think that debt is worth a lot less than it was once worth. So a building today
Cecil Head and Shoulders build on 1 minute.
$1 billion or $500 million is probably worth at least 15-20% less than that, maybe more than less than that. And as a result, there's going to be some distressed debt on the market over the next 2 or 3 years in the real estate market in major cities.
Too onerous for the economy to handle, or is all of our preparation for this
event
started to price it in maybe?
Did the job.
Well, on real estate, I do think that eventually there are going to be some transactions where people will be buying some real estate at distressed prices or depressed from what they were thought to be. But I think generally the U.S. economy is not facing an abyss. I don't see us all of a sudden going into a recession overnight or anything like that. There's enough liquidity in the economy. The Federal Reserve, I think, is on top of the inflation situation. I think
back up to VWAP almost.
Making certain the government works reasonably well. And then there's always a chance
I'll have
of
to stop myself out of these.
Event happening overseas, a war breaking out somewhere or something like that. But short of that kind of thing, I think the U.S. economy will go along reasonably well over the next 6 months or so.
Okay. David, there's not a lot of areas that you haven't developed some expertise over your time. Politics going to be in the cards. It sounds like you're very attuned to the risks posed to the economy through Washington right now.
Well, there's always everything in Washington is political. Nobody's always looking to the next election. The day after one election, we're worried about the next election. And clearly, it's unclear what's going to happen in the presidential election. The conventional wisdom is it will be former President Trump against current President Biden. But the conventional wisdom in Washington often changes at times, and sometimes it's wrong. So that's the conventional wisdom today, and likely to be those two people running for president again.
All right, David, great to catch up. Thanks for being here with us.
Thank you.
Appreciate the conversation.
Thank you.
Absolutely. David Rubenstein, co-founder of the Carlyle Group. And there's some really great interviews as well, and his peer-to-peer conversations on Bloomberg. Go check it out. Everyone from Jerome Powell to Kim Kardashian.
Choppy mess.
All right, when we come back, Chartmaster's got some earnings. Carnival,
it's to be expected after all the nice trading days they gave us last week.
Reports get technical next.
VWAP chop. GNS 3.3. I think it wants to go up, but either way still, of course. Yeah, I don't know enough about the fundamentals of BBIG to know. Just knowing that stock's going to OTC and first splits and all that usually are the end of them eventually, the beginning of the end. But yeah, I mean, some come out of OTC, some come out of bankruptcy. It's, you know, could happen. GME's up 1%. This first resistance is going to be broken on it. .2% on GNS. AMC 5.5. All right. I think that rally on SPY woke some stuff up. I like that show of support on AMC. EU close in 1 hour. Barbecue selling off. Broke out of its barbacoa range. Down 14%. It's at 9 cents now. .3 on GNS. What kind of fill did it give me? Oh, it's showing my wash sale price, that's why. AMC 6% now. $6.5. Oh, GME woke up a little bit there too. Oh, I guess that was what we were seeing before. Yeah, it's up 1.3. AMC's up 6.5. I'm so sore. Oh. Okay. 10:45. Thanks, guys, for your likes. Appreciate the support today. Thanks for showing up on this Happy Money Monday. Got 16 thumbs ups. And for potential long here back on SPY. Gotta be careful. Been very choppy, and we're getting into the lower volume, more chop time of the day. But I was up on the calls from the morning, gave back in this chop, and then some. That small position for this move, and then larger and larger. Which, yeah. Got greedy. Well, if it's going to reject there, I might get puts instead. Looks like it is. There's the break to the upside. And right back in it. AMC is up 5.7. GME is up 1 now. GNS up 2.3. Buy one's it. Run gave back its gains. Down 1%. What the heck? Beyond is down 0.5%. Etsy. And SPY coming right back down here. Below VWAP now. What a choppy mess, man. Got an inverse head and shoulders here. See if it bounces there for that shoulder. Average into a call there. I don't know. I'm in this deep. I go all the way. Might as well. Etsy holding that level. 63.95. And I should be stopping out there. Kind of respecting that selling channel. Really ugly though. I'm expecting today to be more bullish, but morning's definitely not going to be an easy ride. Oh my gosh, dude. Realm just keeps selling off. Down 6% now. It's crazy. Still insider selling, I'd imagine. CEO said he's not selling, but seems like everybody else is. Holy flush there, Spy. I'm up on 11 o'clock. 30 minutes. You close. Maybe we can shake this off. Shake off this chop. Nickel's up 10%. Spy. Now some more there. Maybe it wants to see this inverse cup completed after all. Consolidation on Groupon. Crazy how well it's holding up. Wow, firm's really sold off there. Nice little double top on IONQ. Finally, AI is coming down. SoFi's head and shoulders. Like yesterday, Friday broke the neckline, so nice short there. Snap, same deal. Head and shoulders broke the neckline. Got support down here at 815. Just slowly selling.
And make them widely accessible to these AWS customers. Part of this expanded collaboration, Anthropic will be using AWS Trainium and Inferi chips to then build and train and deploy its future foundation models, benefiting the price, the performance, and scale and security of AWS. The two companies will also be collaborating on the deployment of their overall technology. AWS
Barbecue down
will become
20%.
Anthropic's primary
It's at
cloud
8 cents.
provider for some of their different critical workloads, as well
Buy
as
bounce in there a
including
bit.
safety research and future foundation for their model development. So again, just the fact that we're seeing a way that Amazon will be monetizing and expanding its generative AI offerings through this partnership, I think is read as a huge positive here. A lot of these companies have gotten this AI boost and thrown their hats into the AI arms race, but now detailing what that actually looks like for a company, and with Amazon now sort of explaining what this collaboration looks like, I think is read as a positive here. Costs are another thing that the street really cares about regarding AI offerings, and the fact that Amazon is in a collaboration, I think is read also as a positive, because they're not going to be as cost heavy as, say, a company like Alphabet that is just streamlining their own AI offerings.
All right, appreciate you breaking those details down. And Jenny, my mind is always on Amazon as well. I think I pressed purchase about 15 times on Amazon just this weekend alone, so can't wait for the credit card bill. Jenny Horn, markets correspondent, thanks so much. Let's get some insights on the news that's shaping the market, and for that we welcome in Kayla Brunn, senior economist at Morning Consult. Kayla, thanks so much for joining the show.
Thank you. Good morning.
Guts.
So Kayla, this
not quite the bounce
yet.
With
the idea of
they're still young though.
Longer rates. The Fed says they'll hike one more time this
they're
year.
Still young.
Rates will stay above 5%.
Definitely some ugly chop this morning though.
How realistic do
See if we
you
can
think
break
those
some of these
are you skeptical,
channels.
or do you think that sounds about right?
I think really we're all sort of in a position of waiting to see what the data will say. PCE coming out this week, I think will
That's
be.
True. There's a lot of data this week.
They
could definitely shake things up.
Expenditures. There's the price index part of it, which is the Fed's preferred measure, of course. But having already seen CPI, the consumer price index, that might not. The inflation side of it might not be as much of a surprise. But really, I think, and I think it was clear from Powell's comments too that they're turning more to a focus on growth and the strength of the consumer, what is happening with consumer spending, what is happening with overall economic growth, and how long can that keep up. So I think that might be more so the number to watch coming out this week for a clue about what's really happening in the coming days. And I think the Fed is going to wait and see, and we're all waiting to see as well.
So let's talk about your expectations for that core PCE price index, because we did see CPI tick higher in the latest report.
GME up 1.8.
Clear line down. What
New high there.
Specifically are you looking for?
This thing is so liquid now. It's crazy.
On Friday.
Kind of above that first resistance.
Well, in the price index part, and what we saw already with the CPI, energy was a huge part of that increase, and that
AMC
matters
also
a lot for
6.8.
US consumers. In terms of how much it registers in their sentiment and how it sort of affects their overall spending. Just because gas is such an important cost, it's such a visible price. What the Fed may be more clued into and watching for is really what happens with some of those stickier components that aren't as volatile, to really get a sense of where the
climbing back up to
inflation
VWAP.
is going. So Powell has spoken a lot about the services excluding housing component, and if we continue to see a slowdown in that, I think that would be a very welcome sign for the Fed in terms of that more lasting impact on cooling inflation, which we can expect to see at some point because we have seen cooler wages, and wage growth is a big component of that.
We've certainly seen a moderation, but when do you expect inflation to actually come down to
There's
the
VWAP,
2%
break
target?
VWAP in that upper channel. I get my last call.
I don't have a drop dead date of
Whoa,
this
there's
is
a
when
pop.
I think they'll get
Look
to the
at how
finish
choppy
line.
that
And I
freaking
think
is. That's
what's looking
insane.
increasingly
All right, I got my
possible is
last call there.
it may be
Bon
it's looking like a
voyage.
bumpy road. We've already had, you know, some steps forward, a few steps back. As you mentioned, we already had a little pop up in the top line number.
Look how crazy
what
this
energy
freaking
prices.
chop
And
just
you know, there's
shipped
other
so much
things
out.
on the good side that could lead to that too.
Wild.
Especially because so much of the progress that we've
I need like a
researched
big
so
move
far
now
has come on the side of goods, and those
for these
do
calls to
tend
work.
fluctuate a bit more when we're having less of a sort of year-over-year negative benefit from the good side.
Which
you know,
we might get.
less helping on that side. We could see some more bumps in the road.
Pretty good break. Nice volume.
But it looks, overall, things do look like they are heading in the right direction. It's just, I have a feeling, and we've already seen it, there's probably going to be a bit of back and forth movement before anyone can really declare victory.
Need a break high of the day.
Cost? Are you in the recession or the no recession camp, especially
I don't see
considering
a
that yes, the
retest of
consumer
that
has
pre-market
been
high.
resilient and prices for the most part are coming down, so there's a little bit less pressure aside from when they go to fill up their tanks, but they're going to have to start repaying those student loans, you know, in the next few weeks, really.
Yeah, I wouldn't go so far as to say that I'm, you know, counting
Back
down
up in
to
this
a
Bulls channel.
recession or anything like that, but I am pretty firmly in the camp that I'm expecting slower consumer spending, and it could drag us in. It could, you know, tilt us towards a recession. I'm absolutely thinking that some of these shocks that are coming up this fall are going to lead to, you know, a slowdown in consumer spending. Specifically in our data, we're really looking at Morning Consult, we have our own sort of measures of spending, and we've seen that younger consumers particularly were one of the groups that's been driving a lot of that strong top line spending over the summer. Younger consumers just didn't seem as concerned with inflation or worried about the future, so they were really willing to kind of go out and spend. These are the same consumers that are having to face the costs of these, you know, student loan payments coming up again. And we've already seen in August, some of them have started to buckle down. They're spending more on education, debt repayments, and less on all other categories. So we're already seeing the consumer start to respond to some of these shocks. Higher gas prices, that could hit lower income consumers. So there's really various pockets of weakness that it looks like are coming together to shape up for kind of a cooler next few months in terms of consumer resilience.
And Kayla, we're also days away from a potential government shutdown. Could that exacerbate recessionary concerns? How much of an economic impact could a government shutdown have?
It's hard to say because we've been in this position of the brinkmanship up until, you know, down to the wire, and then they come up with the deal. So it's hard to say when we've been in this situation so many times before, and it starts to feel a little like the boy who cried wolf. But, you know, if a wolf actually does show up one day and there is a prolonged shutdown, that matters. You know, the government is responsible. You know, fiscal money is a lot of what contributes to the economy. And it's the sort of thing where you don't always notice it until it's taken away. Things aren't running. You're not getting the data releases. So we'll have to wait and see. But it absolutely could be another factor.
A little pop with GME on there, 2%. Same with AMC, up 7%.
Thanks so much for being here.
Thank you.
Plenty more to come on Trading 360.
Yeah, I mean, they just built all this liquidity.
Three stocks, three charts, three trades.
Then just
Rick Ducat will take us through the technicals, and Alan Nuckman will take us through the trades. For
this
GSK,
is, I mean,
Catalent,
if you look at it,
and
it's a
Avantor.
crazy
That's next on
deep
Trading
bull flag.
360. Stay with us. We'll be right back.
That amount of pullback, that's a lot of strength. It's good. Should be a strong follow through, I'd hope. Just kind of still break a little more, couple levels up there. Didn't say we don't get punished for not paying student loans. No punishment. But now you have to pay them. I hope Spot's still not in this chop. I think it could be. Still possible. 2.15% on GME. There we go. Bit more exuberance. Ooh, that chop this morning. Yeah. Thought I was on the right side. Which way I was breaking.
Money flow. And I follow leveraged money accumulation in the options markets over my
There's like
shoulders, because that's
been hard to
usually a
catch up.
sign
That's
that
fast.
somebody has a pretty intelligent take on where they think a stock's going to go, because they're buying options that offer a better payoff, less money, and they don't have to file the appropriate paperwork if they're loading up on stock. So if I look at GSK, number one, very simply, it's been trading between 34 and 38.
I'm gonna close one there.
A breakout of this range targets 42.
High of the
We're very
day.
close to the top of the range right now. Now this stock is 20%
I don't want to close any,
off
but
its,
at the same time, I
top, so there's
close
upside. The PE
more
is 10,
probably.
so there's a lot of positives,
But
for me,
pretty
it's about
bullish.
the money flow. I'm seeing large accumulation in options and bullish options, which I'm follow the money as a positive sign. So the way to play for me
AMC
is I'm looking
8%.
at a option here, an in the money option.
Give me
I'm looking at the
2%.
May 34 call, again the bottom of this sideways range. It's trading for about $4.75. It's $3.50 in the money and has 8 months of time.
Go SPY,
So
nice
a ton
nice
of
break on the high of the day.
for this to move
Built
higher.
so much liquidity,
And
it's
again,
like
the expiration
just
break
rip
even is
now.
about $1 higher, maybe $1.25. And if we just get to that 42 target, that option will
Built
gain
another one at the top of this
100%.
channel.
All right, Rick, does the chart reflect Alan's bullishness when you take a look at GSK? It is now positive on the year thanks to the September gains.
The chart's definitely not looking too bad here in terms of bullish price action, but I thought it was interesting because I actually have a bit of a unintended theme as well here, and it's triangular price patterns. We're seeing this across all three charts today. You can see here we've got a symmetrical triangle. A trend line going down across the highs, trend line going up across the lows, converging toward each other, very clear cut. And the reason that people try to look for these types of patterns is because they can lead to energetic breakouts when they go cross either above or below one of those two trend lines. You can see right here, we had a nice move upward once we eventually did breach our upper trend line here, our downward sloping trend line going across the highs. It took us above all three of our exponential moving averages in one fell swoop there. So really a strong day in terms of price action for this stock. Now we're in kind of an interesting position as well because we had this big breakout to the upside. I'm wondering if we have kind of a bullish pennant type pattern here or a bull flag. You know, we had this big break upward and a bit of a reset to the downside. That would be the setup for another upside breakout above our old highs here, just above 38, this red dashed line here. So if we start to get a move above that point, things can get really interesting. Now, the other thing about this chart is we never really took out our old intraday highs all the way back over here near 39.74, all the way back here. So that's another potential area to watch if we continue to move to the upside. RSI, our measure of momentum, a little bit of a fake out there because we had a cross into the overbought area, but we relaxed a little bit. We moved back down below that level here. So look for another cross above that overbought area if we do start to break above this upside resistance near the $38 level. If things do start to go south though, we've got a support point near 37. That's about our old highs right there, this green dashed line. Then we've got three moving averages to choose from for support.
All right, only about 49 cents away from that $38 level, so we'll keep an eye on that. All right, Alan, let's move on to your next trade. Catalent CTLT, ticker symbol. It's basically flat on the day as well, only modestly lower, but having a bit different of a month than GSK. It's actually down about 10%. So are you buying this dip?
Yeah, this is a stock that's been beat up badly. It's missing a digit. We're sitting at the 40-some range. It was 140 back in 2021. Now, it did make a May low, but it did so on earnings, and that's usually kind of a last gasp capitulation, and that's what I'm looking for. This is a stock that's been beaten mainly between 40 and 50 for 6 months. Breakout of this range targets 60, and in the bigger picture, it's been between 40 and 80, mostly for the last year, with a lot of gaps up at 60. So 60 kind of seems to be this magnetic area that I'm looking for. I'm looking to buy a January option, January 40 calls, trading for about $750. The stock right now is at 45, so it's $5 in the money. And again, at $60, this option will about double in value. What I'm looking for here is this leverage buying, this follow the money, and the money is starting to accumulate in this stock that's been down but not yet out.
So Rick, Alan pointed out Catalent's missing a digit. I was just taking a look at the median price target for Catalent on Wall Street, and it's $50.50. So Wall Street not confident that it will get back up to that extra digit. But what does the chart show you in terms of which way this stock could move?
Well, as I said, we kind of have a theme of triangles today. On this chart, you've got not one, but two triangles that you could consider for your analysis here. Take a look at the upside here. We've got a long-term downward trend line starting at those yearly highs almost a full year ago here, this white dashed line going across those highs. Now, we haven't really came near it recently here because we have our other triangle to consider. We've got kind of an ascending triangle shape here. We've got this trend line going across the lows and horizontal resistance near 50 going across these highs here. So you can see we have kind of two competing visions here. We've got the symmetrical triangle that's kind of lopsided versus our ascending triangle. Symmetrical triangles don't really have a bias. Ascending triangles are typically more regarded to be a sign of upside, impending upside breakout. Certainly not a guarantee that's going to happen, though it doesn't happen every time. And actually, it's kind of interesting because we are making a little bit of a foray to the downside here below this upward sloping blue dashed line here. We haven't touched on the support that I had my eye on yet near about 44 to 44.50 or so. This green dashed line representing some old highs and some lows right here. And 44 is our volume profile point of control, the area of heaviest trading according to our yearly chart here. This is the most heavy trading at this level here. So that's a potential support point to keep your eye on as we go forward here. RSI, measure of momentum, trending downward in the bearish territory. Nothing really wild in terms of divergences or anything crazy like that. Just kind of following the price action here. So what we have now is a clear resistance level and some clear support levels to work with here. So if we were to start to fall down a little bit lower here, we've got some support. The 40 level that Alan mentioned, right around here, right around those old lows, that could be one point to watch as well. That could be an area that we could try to hold. To the upside, if we break above 50, this would be an area that would catch my eye, our old trend line near about the 55 level. Then we've got our purple 252-day exponential moving average near 57. But in the short term, at least, our moving averages are all trending down. Prices below all three of them, where it's looking more like the short term, at least, is more biased toward the downside here.
Okay. All right, Alan, let's talk about your final trade, ticker symbol AVTR. Is it Avantor? It's a new company for me. I'm not that familiar, but I see it's a chemical and materials company.
Yeah, I'm not familiar either. I trade what I see. I trade the charts. As long as there's a lot of buyers and sellers, I can, and there's liquidity, and the options have tight spreads. You know, you put in limit orders, obviously, when you have somebody that may have a little bit less liquidity, but it's a stock that it's 50% off its 2021 top. And it's been between 20 and 25 for a year. Breakout of the range targets 30. Now, just like the last stock, it's come back to its 2020 breakout, and that often acts as some super support. The volatility is lower. The volatility is down about 30%. It's about half of what it was. Again, that near-term
sold
target
one.
is 30. We're trading at 21 right now.
I was down pretty
Just need a
heavy,
modest
so
move, just
be
like the
green.
last stock. I don't need a
Sell a
whole
little
lot.
bit.
You know, I just need
I'm gonna
some
start
modest
using my other
moves
account
to
probably
take
today
into the
to
option.
continue to buy this rally.
Range midpoint, you know, we
After a
said between
pullback.
2025 is 22.5. So that's kind of a pivot. That's important.
Nice guts,
If it
well
just
done,
gets
dude.
Back up above that, then it should just get to the range top.
Close their
at
Fridays?
25. The way to play, January
All of them?
17.5 call. The low on this is 17.90, so that gives you the right to be long.
No-
Below the
no
low.
faith in the rally?
It's trading around
Continue?
4. It's got 4 months of time and 80 delta.
How about our big bounce and gap fill?
And obviously, it's in the money, about $3.50.
Are you scaling out?
And a move up to that 25 range top, the option gains nearly 100%.
All right. Rick, maybe you can tell us what Avantor is or how to pronounce it, and tell us how the triangular theme fits into this one.
Well, I'm not going to be able to help you out too much with what this company does, but I mostly focus on the price action here. And what I'm seeing here is yet another triangular shape here. We're seeing one going across the lows here, here, and here, and one going across the highs, starting with those yearly highs near 25.25. So that's around the area Alan was looking for it to potentially move up to. Some nice gains if we do.
Profit's profit.
if
Well
we
done.
were to move up based on that option. And we can see here once again this triangular price kind of price action
444s.
compressing within these two lines here. And
That's
really,
pretty
we've
far out of
seen
the money.
some volatility this year, but not a lot of net.
But they should get
movement.
profitable if we
We're
fill this gap.
practically unchanged
It's not
year to
too late in
date.
the week.
We're only up less than 2% on over the past 52 weeks here. So a lot of up and down.
I don't think
not
today's
really a
over.
lot of
Not
net
with all this
movement
liquidity
here.
that was being
Once
built.
again, we're finding ourselves close to the volume profile point of control. This area
Got
of heaviest
pre-market
trading
to test.
coming in right just below the $21 mark.
I don't
So
know.
we are holding
Nice
on
highs
just
from
barely above
Friday.
this point. This seems like it could be an area to start looking for some
Or
support.
34.
And really, if you look at the chart here, you can see much of the trading is concentrated between $20 and $21. Not really very heavy trading anywhere else except around this point, this little kind of baby volume node near 24.50. So once again, looking at momentum, RSI trending downward, breaking below that 50 midline here as price broke below support. We broke through our 21-day and 63-day moving averages in one candle on Friday as well, not yesterday, Friday. So we can see now some places to look for potential support. Right around here, we've got our trend line and our old lows near about the $20 level. So between 20 and 20.25 or so, that could be an area to look for some support. If we do break to the upside more, we've got our moving averages to contend with. We've also got these old highs near 22. So if we were to get above Allen's break even near about like 21.50 or so, a breakout above that level is what we really need to get. Beyond 22 would be the mark to watch.
Currently trading around $20.98 right now. Rick Ducat, Alan Neckman, thank you both so much for being here. Coming up next, we're going to spotlight the writers in Hollywood studios coming to a temporary agreement and the WGA strike. More on what's ahead for streaming stocks when we come back, so stay with us. We'll see you back here.
I should go on a content creator strike, shouldn't I? No more happy money. No more happy money for you. Can be, it's possible, Kyle. It's quite unlikely. Alright, EU closed 2 minutes ago. You're right on that red candle. Interesting. Eyes pulling back a little bit here. See if it's gonna reload. Keep going. Reloading! AMC's up 8.4.
scheduled strike is over after the WGA and studios announced a temporary agreement or a tentative agreement over the weekend. For more, let's bring in Jamie Lumley, senior analyst at Third Bridge. Jamie, thanks for joining us.
Great to be here.
So I think it's important to note this is still a tentative agreement, nothing set in stone yet, but I saw a quote from the WGA calling the agreement exceptional with meaningful gains and protections for writers in every sector. What more do we know about this exceptional agreement?
So there definitely remains a number of things that we haven't heard about. In terms of the details of this agreement, so far it seems that there are some more guarantees from studios that writers will be kept in the writing room for TV shows longer than previously, and also that there have been some changes when it comes to residuals, which has definitely been a really key thing in this whole process. As we look at this industry with increasing emphasis on where streaming is going, there's not been a lot of transparency around data, the success of shows on streaming platforms versus the traditional TV landscape of linear distribution. So really looking at how that has shifted, what sort of progress has been made in those 5 days of negotiations we've had up until now to iron out this deal, that's where really some of the most important aspects will be, which will ultimately determine how happy both parties are coming out of this agreement.
What about the role of AI? Because I know that was a key concern for writers going into this. Any clarity on how they're going to be dealing with the role of AI?
So far, it seems there hasn't been that much which we have heard about for AI. As you mentioned, this was a very important area because there were a lot of writers that were concerned that if not being outright replaced, this could reduce the number of writers in writing rooms. This could ultimately pose a major threat to their role in this industry. So that's definitely a key area to look at, and is also central to the actors' strike, which is still ongoing, as the way in which AI will be able to either replace or fully alter the involvement of people in this industry is a big concern. So definitely something to keep an eye on, as also it is still fairly nascent. A lot of this is talking about what sort of impact there could be down the road, as to date, it's still not fully understood the extent that AI could revolutionize the TV industry.
So studios have said that the strike in the shorter term has actually been saving them money, but in the longer term, there would be financial fallout because they have no content to actually deliver and charge for. So what do we know in terms of the fallout, given that this lasted 4 months? Which companies are, stand to benefit or to have lost the most from this strike?
It's a good question, and there are a lot of moving parts. To start off, what we've been hearing from experts is that by and large, although companies are in different positions, there really isn't a lot of opportunity for market share gains or improvement here. It's really much more of what degree can these studios and streamers mitigate the impact of the strikes versus necessarily gaining versus competitors. And a couple things to look at here. There may have been some of those short-term benefits as companies were not spending on their content development, but at the same time, one of the things that we hear from experts day in and day out is just what sort of impact there is for these streaming platforms when the velocity of new content slows. What does that do to subscriber numbers? And across the board, this could be a churn driver. It could lead consumers to perhaps change up what services they're engaging with, maybe engage more with fast options, those free ad-supported TV where they don't have to spend for a platform which is not having new content. So a couple things to keep in mind there. Also, just looking at the real size of the impact, one of the key areas to look at is Warner Brothers Discovery, which came out and revised down their 2023 earnings by $300 to $500 million as a result of the strikes. So you can really see the magnitude of this can be quite large. And it's also important to understand that while the writer's strike may be ending, production of shows, of movies is not going to continue until both strikes have been able to conclude and find a new deal, because at this point, actors are still not able to promote their shows and movies, and this could definitely impact the release schedule for the remainder of the year into 2024. So definitely still some things to look at there as well.
Well, that's a good point. What impact could this have on the actors' strike that, of course, is still ongoing? Could this pave the way for a deal there as well?
So movie studios are certainly hoping that this will be able to have one agreement right after the other, but it's worth looking at the differences between these two strikes and the issues that are disputed, because while there are similarities, such as around the role of AI, around what the new residual payment structure will look like, there are also some differences. So what we've heard from our experts is that, generally speaking, on any show's budget, about 5 to 10% will be allocated towards writers, whereas 10 to 50% is allocated towards acting talent. So that's definitely a much larger piece of the pie. So any incremental changes when it comes to residual restructures or just the overall compensation there will have a much larger effect on overall budgeting than what the agreement for the writers might entail. So looking at that, there's more at stake. It might take a little bit more time to iron that out, but studios are certainly at this point really chomping at the bit to get production going again so they can look to salvage the next TV season and then also get things moving again on their film side as well.
Okay, so Jamie, a lot to still consider, a lot of questions that still need to be answered. But if you take a look at all of the streaming stocks right now, given potential fallout, given where they stand in terms of that path to profitability, which would be your top pick right now?
So as we look at the landscape, we've been hearing a few things from experts, and Netflix, the one profitable streaming company, definitely comes out at the top of the list as companies able to manage this crisis, mainly just because they have a robust content pipeline to continue to have new releases over the course of the strikes. They also have very strong international production capabilities, which will allow for some content to continue to be produced during this time period. And also, just back to the strong business fundamentals, they are making money, which is not the case for Disney streaming business or Warner Brothers Discoveries or Paramounts. So this definitely is an advantage. That being said, just circling back to the earlier point, it is still a challenging time for everybody. International content is not a direct substitute to American content. If you look at stuff which is still new, such as sports, for example, the sports audience is not necessarily the same as what you would have for a scripted drama. So there are still some challenges here. But if we look to the companies which are in a slightly more challenging position, if we think about Paramount, Warner Brothers Discovery, they rely a lot on their business in the traditional TV landscape, and the fall has definitely been challenging with the lineups being shifted, an increased emphasis on reality TV, unscripted shows, has definitely made it a bit tougher for them. Those companies that are still trying to maintain their legacy TV businesses while also drive profitability in streaming. So that's what we've been hearing from experts, but there's still definitely a number of challenges for all these players here.
All right, all good points to consider. Jamie Lumley, thanks so much for sharing your insights. Really appreciate it.
Thank you.
Have a good one.
Jamie Lumley.
Microsoft just got an upgrade.
Jamie Lumley. Excuse me. Looking to reload some calls here.
Look at the stock and make an example trade after this quick break.
Binge watch the market with the Schwab Network.
No.
Tune in 24 hours a day, 7 days.
Getting some calls there. Whoa. Dang it, I don't think it filled before that pop. Oh, maybe it did. I was trying to scale into him. I got one, and then I'm so slow on my other account. By the time I could get in and get more, just got more right straight away. Okay, new high of the day there on SPY. Didn't get a good entry on those. Trying to go slow and scale in, but you just can't. It happens too quick. Once it breaks that channel, it's bon voyage. Rip, rip, rally. Should have had more contracts in my first order. Can't slowly scale in when I'm on a slow brokerage. Oh well. Got some. Not great fills. Here we go. Need to break out of this channel now. It's kind of rejecting that. First signs of it kind of starting to roll over, maybe. Dang. Close a little bit there. Like the, yeah, I didn't even see that coming. I drawn that line sooner. Selling a little bit here.
Anything else?
Primarily, it's Bitcoin, Ethereum. Those are beyond within the more certainty of regulatory framework because you can trade futures based on them. It's really still a tale of Bitcoin, Ethereum, and then everything else. If we look at the broader market, as we look through the CoinDesk Market Index, Bitcoin and Ethereum are really propping up the rest of the market. So very much so, we're seeing Bitcoin dominance much higher than years prior. So it is very much Bitcoin, mostly Ethereum, and then everything else.
So Emil, despite this Bitcoin dominance and some seemingly positive catalysts, Bitcoin has been stuck in this $26,000 range for quite some time. Yes, that's impressive year-to-date gains, but far off those previous highs. What's keeping it in this range?
Well, Bitcoin, it did climb as high as 27, a little bit above even, not too long ago, and ahead of the Federal Reserve meeting on not too long ago. But it turned lower due to a strong selling pressure. Both the 200 weekly and 200 daily moving averages are acting as strong resistance in the 27,800 level, something like that. So, I mean, in the options market, 24,000 puts and 35,000 call options have the largest open interest right now, and that suggests that the market believes that Bitcoin will stay in that range for the foreseeable future.
Todd, what gets it meaningfully above 27,000?
It's all about the Bitcoin spot narrative. And once we get past that, we can see levels higher. It's a bit challenging right now with real yields rising. The 10-year rate now is at 4.5. Over the last few days, post that somewhat hawkish FOMC pause last week. We really need that spot application to be reviewed by the SEC and passed to get us from a Bitcoin either investment in trusts, in Bitcoin miners, in Bitcoin futures ETFs. We truly need that spot ETF to transform the Bitcoin market and bring it, tie it more into the traditional financial system in a much more familiar wrapper as a spot ETF would provide.
Okay, so Todd, we'll talk about potential ETFs in just a second, but Emil, first, do you have a longer-term Bitcoin price target, anything close to those old highs?
Yeah, I think we'll get there. And to Todd's point as well, looking at what the broader financial market is interested in right now, it is very much the spots. I know we're getting in the ETFs, I know we're getting into that a bit later on. But essentially all the conversations I'm having right now, be that with mid-level bank to high-tier asset managers, they're all talking about this. And then, of course, we have the halving coming up as well. So I don't see it as at all unreasonable that we'll reach the former heights, and certainly will surpass that as well in the medium to long term. We have the halving coming up somewhere around March, April, something like that of 2024. And at that point, I would be very surprised if we don't see a significant increase in the valuation of Bitcoin.
Okay, so Todd, the Bitcoin Grayscale ETF did have that big win against the SEC earlier this month. Where do we stand in terms of those regulatory issues, and how much of an impact do you see it having on demand once we're past those?
Once we're past into the world
There you go,
of a
SPY.
ETF, we'll be able to have our grandparents invest in Bitcoin, have those that are less tech savvy invest in Bitcoin, all through an ETF that will track the spot and provide no significant discount or premium to NAV. But until we get there, the existing investments into Bitcoin outside of opening up a crypto exchange account are somewhat clunky, and they've been kind of scaling out of these the existing financial system. So we really need that spot ETF to
here
to
now.
the next level.
I think it might be kind of starting to roll over.
We're
The steeper channels
and
maybe getting overrun by this less aggressive one.
So it will be in the future. It just is from here till hopefully October, if there isn't a government shutdown. If there is a government shutdown, that could actually delay the process a bit because the SEC won't have the same staff to review the applications. But we'll get there. It's just a matter of when.
All right, Emil, we only have 10 seconds left. So you said we'll get back to the old highs. How high? What's your price target?
I wouldn't all be surprised if it hits somewhere around the 40, 50-ish marks by mid next year. Again, that's an estimation, but looking at what's actually happening on the ground, the inch that we have, the spot ETFs, BlackRock going in, certainly I don't see that as unreasonable at all.
Thanks for keeping it short. It's going to do it for, thanks both to you too, Todd and Emil. It's going to do it for Trading 360. I'm Caroline Woods. I'll see you back here at 2 p.m. Eastern for the watch list, but stay tuned because Fast Market is up next.
Okay, closed out the rest of those on this backup account. I'll have the ones on the trading account. GME up 2%.
but up 0.4% today. To help me break down this market action, let's bring in my co-host, Kevin Hinks. Kevin, it seems like, and I was saying this before we came on air, it seems like even with the dollar higher, yields higher, which has been pressuring equities so far this month, it feels like the market wants to go higher at this point, but muted gains at this level.
Pretty resilient market with the dollar and yields both higher that this market is managing, although full disclosure, they have sold it off pretty hard last couple of days, so it's not insignificant. Remember, if your narrative is that the second half of the year is still going to be really good, which was the narrative at the beginning of the year.
Right.
We're in the last week of the month, last week of the quarter. If you're setting yourself up for Q4, eventually you want to start nibbling on some dips. Do I know if this will hold? Higher dollar, higher yields, it's very difficult to rally stocks. Doesn't mean they can't. Yeah. Crude oil's lower, but not significantly lower. But we'll get a lot of data later in the week.
AMC about to make a new high.
Really decide whether this market moves or not.
You know what? A lot of those predictions early at the beginning of the year, Kevin, where they were all looking at historicals. Well, historically, if we start, if we're up this much in the first half of the year, we've seen it 9 out of 10 times go higher. But this is a different environment where interest rates are at 4.5% after basically a zero interest rate policy for over 10 years. So maybe that caveat's coming into play here. Maybe some slower growth on inflationary pressures also. But one positive in the markets today has been some of the networks and streamers. They've got a little bit of a boost today. The Writers Guild of America reached a tentative agreement here today. Let's bring in Jenny Horn, markets correspondent here, to help us break down this story. We're seeing a little bit of a rebound in some of these stocks, Jenny.
Yeah, we're seeing a rebound, but I mean, not necessarily seeing some outsized strength that you'd think would follow a 146-day-long strike. So names like Paramount, names like Warner Brothers Discovery initially saw a pop. That pop hasn't exactly held on the session. So we did get reports the Writers Guild of America reached a tentative agreement with entertainment companies, like I said, 146 days into the strike. That has resulted in multiple production halts, but now we're finally seeing some news that could be sort of eased from here. The report did indicate the deal includes compensation increases for streaming content, studio concessions on minimum staffing for TV shows, and guarantees related to AI's role in the industry, which is very interesting and probably a part of that deal we wouldn't have necessarily seen coming about a year ago. But members of the Writers Guild, which does represent around 11,000 screenwriters, are expected to vote on the deal in the coming days. So not necessarily completely, I would say, etched in stone, but definitely expected to go through. Now, per the Writers Guild negotiating committee, they said, we can say with great pride that this deal is exceptional with meaningful gains and protections for writers in every sector of the membership. So the fact that we're hearing from the WGA very supportive of this deal, I think, is leading a lot to believe that this will go through. And we did hear from some of these companies' heads. CEO Adam Aron of AMC did respond on Twitter or X, what have you, saying that he sees upsides for movie theaters following this agreement, saying that he really went on to say that this is extremely good news and extremely great progress is being made. So AMC is ripping higher, and that's sort of the reason I wanted to highlight Adam Aron, because again, Warner Brothers down 3.5%, Paramount down today over 2%. It seems like Amazon is the only name that's higher, but I wouldn't even necessarily say they're a streaming company. Netflix is up about 1%, so that's a bright spot. But all in all, the initial strength off the open here has completely faded now into the middle of the trading session.
Jenny, this is moderately good news. Disney's still down on the day after trying to rally this morning. Netflix is higher. A couple other stocks are higher. This is interesting. A couple questions. Number one, I'm surprised that the actors and the writers didn't stick together. This is only the writers that have settled theirs. And number two, this is a bigger issue. How do you take AI and, just like the Screen Actors Guild, or just like the writers, just like the auto workers, how do you promise technology in the future is not going to put them out of business?
I think that's a really good question, because I think that the same was said about social media several years ago, where when we initially saw a lot of these social media heads like Mark Zuckerberg go to Congress, his whole argument was, how could you be arguing against technology that we didn't even know existed several years ago? I think the same could be made for AI and its role in television production, movie production. We don't even know what it's capable of yet, frankly. We do know that right now, regarding some music specifically, there's a really wild feature where you could basically take an artist you like and have them replicate any song you want, and it sounds almost exactly the same. That is very scary, because if you're an artist, you want your content protected, and right now someone else could basically make your own sound onto a different song. That is a whole world of copyright infringement that we can't get into, but I don't think that necessarily they even know what AI is capable of as far as the movie space. But definitely not a positive, because for these writers and these actors that want to remain protected in their craft, it seems like the world is changing, and unfortunately not necessarily in their favor. But still celebrating what is a small win. We'll obviously have to wait and see once this is more concrete in the days to come.
Yeah, and I guess what they said, besides like maybe some of the talk shows that can start because there's not much writing there, most of these writers, if they do get through this deal, they're not going to have any new content until like January or something. So maybe that's why some of these names are down on that news, because I mean, it takes some time to write new things, right?
Watching some of these shows, you would think it doesn't take any time to write these shows, but that's another story for another time.
That's true. Jenny, stop watching that trash, that reality stuff that you watch.
I don't watch any. I just keep rewatching all the Suits. I'm a big fan of like the bring back like the 2010 shows and just keep refunneling them. Suits is great.
All right. Thanks to Jenny Horn, markets correspondent here, breaking down that story. We'll see what happens with the actors after this. Let's bring in Alex Coffey. He's co-host of Next Gen Investing, coming up after this show. Alex, I wanted to get your take here. With the dollar rising to levels that we haven't seen since November of last year, so basically 10-month highs there. Got that 10-year yield that I mentioned up above 4.52%. I mean, you would think that, you know, the sell-off would continue if you just looked at those asset classes and the impact that they've had on equity so far this month.
Yeah, and just because we're up 9 right now doesn't mean that it isn't continuing. Right. I mean, nothing happens in a straight line, Tom, as you know. Markets are dynamic. Things moved around. We've been lower today. We've finished a lot of days lower after being higher for the majority of that day in recent sessions. So I'm not ringing the bell yet. I'll wait till 3 p.m. Central here in Chicago to assess things. But even with the day higher, if the general trajectory continues to be yields higher, bonds lower, and dollar strength, all else equal, that does typically put pressure on equities. But you know, for me, I don't look at it just simply what's happening. I try to look at, why is what's happening. And I look at this market right now post last week. The strength in the dollar is largely the Fed coming in a little bit more hawkish than expectations, Bank of Japan not coming in as hawkish as expected, right. So that yen reprice is going to really put pressure higher on the dollar. But this is a thing that I know Kevin talked about this morning. I talked about this on Oliver's show. I'm watching the bear steepening in the yield curve. That's typically economic positive. The bond market for much of the last few years has been more pessimistic on the economy, less belief in the Fed actually continuing to hike rates, and has consistently overpriced the probability of lower rates in the near term. Where the equity market has done kind of the opposite. The equity market has swelled valuations despite 3 straight quarters of earnings declines. What I think we're watching happen is the bond market capitulates slightly that, hey, maybe the Fed will do what they say. Maybe the economy isn't crashing into recession the way that maybe we thought 6 months ago, a year ago. But at the same time, the equity market isn't going to potentially get those lower rates. And there's still reasons for concern in the economy. Maybe it's not going to, again, crash into recession, but it's not really this strong, robust growth either. So I think we're watching the equity market be repriced down from one spectrum and the bond market be repriced from the other. They're meeting in the middle, and that's leading to this interesting dynamic where the picture seems cloudy, but for the most part, it's just reactionary.
Why aren't
go ahead.
Why aren't banks rallying with a steepening yield curve?
Yeah. I think that is more based, and this is just my opinion, I think that's more based on the economic outlook the lending that's going on, some of the other activity as far as the economy goes. I think that's part of the problem where, as you mentioned before, Kevin, when you got oil prices at $90 a barrel and you've got $100 to spend in a month and you used to spend $30, now you got to spend 45 or 50, that takes away from a lot of the economic activity. Is that maybe what you're thinking, that
less overall swipes of cards? But by definition, we talk about this all the time. A flattening yield curve hurts banks, right? Because you're borrowing on one level, you're loaning out on another, and that tightens or inverts.
Right.
Well, if it's starting to steepen now, the overall picture for financials should be improving. Yet, all these look like, JP Morgan doesn't look good. Their chart, Goldman's chart doesn't look good. It's interesting that they haven't caught a bid in this market.
Your thoughts on that, Alex? Because I mean, you heard my side of it. I think this is maybe a reflection on the consumer is probably going to be slowing down a lot more than maybe what the market's predicted at this point.
I mean, we're seeing bear steepening. The message that sends is positive economic prospects because we're seeing the long end of the curve sell off faster, yields go up higher.
Right.
But we're still very, very inverted. So to Kevin's point, the financial dynamics are still negative for financial institutions. They're improving, but it's going to be relatively unprecedented if we uninvert the way that we've sort of started to see. We have no time in history we can go to where we've been this far inverted, where we uninverted because the long end caught the short end. It's never happened. We've been inverted where we've seen bear steepening, but we've never been this inverted. So to me, this is still a market that is kind of saying prove it. So while things have trended better, no one's buying it at this point. I think that's also why you see equity weakness.
Think about this, kind of to capitulate off of what Alex is talking about here, Kevin. Why haven't it's been a risk-off trade for stocks this month, right?
I mean, if you look at
by breaking that channel, little bull flag.
Mid-July we hit 4,600 on the S&P. Now we're 43.29.
Might be starting to roll over here though at the top.
Typically, when we talk about, whenever I bring up risk off, right? I'm usually talking, they're piling into bonds.
This one again.
And the
by definition, that's where you.
But that's
or
why
building the right shoulder here, a little head and shoulders at the top.
Risk off on the market because equities are getting hit, but the bond market's getting hit also, getting those yields kicked up. At what point does that? I talked to Carly Gardner this morning from DeCarly Trading, really good on oil, but she thinks that yields are going to crack this week.
Starting to close a couple calls.
Lift the other asset classes. She goes, it'll be like a waterfall where the dollar starts to get hit, equities start to rise. She kind of laid it out like, hey, we're getting overextended a little bit here on yields.
By definition, risk off should improve bond prices, right, and lower yields. Risk off should also make the VIX go higher or remain higher. The dollar, it's a little bit dicier of a story, right? But I can understand the first two for sure. Buy protective puts on the downside that brings up VIX. Buy bonds, right? As a safe, especially at 4.5 yields.
That's what I'm kind of trying to get at.
They should be really attractive for risk off. Yet they're not yet.
Yeah.
So then we have to think about what's the catalyst for this to happen. We got Fed speakers all over the calendar this week.
Right.
If anything, if we're going to see continued sell-offs in the bonds, it's because the Fed is talking us to that. It's going to be that hardening of November and December towards a 25 basis
break
point
on that
rate
right
hike.
shoulder.
If we don't get that, we might see a natural repricing where yields start to crack, but it's going to come down to those speakers right now. I think the ultimate trajectory, your guess is probably right, but for it to happen really, really shortly in this week, it's going to have to be Fed speakers.
Remember, there is quantitative tightening going on.
Right.
The Fed is selling bonds at these levels. Right. You could say that they shouldn't be, maybe at 4.5%, but they are selling. So some of the downward pressure is the Fed.
Yeah, and people following along on that note. All right, guys, we're going to take a quick break, but we're going to get and expand this discussion on the consumer in today's show. We're going to take a look at Home Depot. The home improvement stock is pulled.
Maybe go to Home Depot. Maybe Bed Bath & Beyond. Or if we have enough time.
Outlook for that consumer.
Enough time.
Fast Market's coming right back.
Nice little Saturday. All right. Spine broke that right shoulder. That's good. Good for the long. Excuse me. I closed a couple there on that test of the right shoulder. I'll see if we reject here or if we continue this deeper uptrend. Is that pre-market high? Oh, we're way past that. Or no, that's pre-market high right there. Taking one more off there. Or will I? Be a big break here. Or a rejection. There wasn't a huge pullback. Neither one of these were very large. Not like this one. Oh, I'm gonna close with more.
Deland Nissan gives you the bottom line on our...
Sorry. Hurry. Round down 7.25 today. Jeez. Almost 9% on AMC. High of the day there on SPY. Breaking through that pre-market high.
Calendar days to the week prior to that earnings, the November 3rd, the farthest out I could go without hitting earnings, November 3rd weeklies. Selling the 300 put, buying the 295 put. It's pretty simple, straightforward.
12:30. Thanks, guys, for your likes.
Got
19 likes in the day.
Wide vertical spread, collecting
If SPY starting to roll over a bit at the top here, if we can
on this one, break even.
break this channel, back up to this steeper channel.
And that's the strategy. $1.25 rather.
$1.25.
Yeah. So 3-to-1 risk reward on it. With it, 398.75 break even. But nonetheless, Tom, the strategy price, obviously, the more you can get.
Barbecue new lows, 8 cents.
$1.25 is fine in terms of the risk
Down
reward.
23.74.
When this comes down to it, the crux of this trade was the general.
Got a little support there at
feeling
74 cents maybe.
bullish.
And then you've
We're
got
getting down to that
all-time
300
lows.
level that had
There you go,
acted
SPY.
as,
There's a break.
support in the past. It has sold off a lot, so you're kind of buying into that weakness. Kevin talked about price to earnings ratio, both on a backwards looking and a
If it
forward
breaks this now,
basis.
too.
Is more in line with historical, so you're not really looking at an overpriced
Testing it.
stock from a valuation standpoint. And it's a strategy that adds an element of probability of success to this, where nothing right now from analysts or news is getting you excited about this name. But there's not necessarily anything that's making you overly pessimistic about it either. If it just languishes sideways here, holds support, this is a strategy that can benefit even if the stock goes down slightly.
Yeah, I like that. Looking at support after it broke through its 50, 100, and 200-day moving averages to the downside. So you start looking at areas and oversold, as I mentioned, on a technical basis with that RSI. Just below the 30 level. Let's break this one down out in the November 3rd monthly cycle, so 39 days till expiration.
Close
Selling
one
that
more
$5
there.
wide neutral to bullish. Put vertical, sell the 300s, buy the 295s. Kevin, break even just below 299. You got a probability of about
test that resistance again,
65% that short 300 strike will be out of the money at expiration. You avoid earnings. Give me your take.
Closed
there
it on the test.
You mentioned the RSI, so it's already sold off.
Even test it again if we break it.
Ton of points on the chart, right around this 300 to 304, 305 level, where a lot of old resistance turning into new support. So yeah, the 200-day moving average is 309 and some change. So there's a lot of points down here signaling if you're bullish on this name, this might be an area to enter. Alex doing a high probability put vertical. It's collecting theta. It's doing all the things that we talk about. It's collecting theta. It's risk defined. It's high probability.
Yeah, nearly $10 to the downside here, Alex, before you get to that break even on this one. When you look at a position like this, if you see that the stock consolidates or moves higher into earnings like we sometimes see, where everybody gets kind of, that euphoric or optimistic going into an earnings event, this takes advantage of it because you avoid earnings, right?
It stays ahead of that earnings event, and so I think the reason that's important, especially this far out, especially if you plan to hold near expiration, which some investors do, is you're actually going to see, all else equal, just time passing, watch this potentially decay, because that's essentially what options do. They decay towards expiration. If you have an event like earnings on the calendar, it will inflate implied volatility going into that event, not necessarily making the options more expensive, but not making them less expensive. So they're going to hold their value more or less, all else equal. And then when you look at this, that's not really what you want to have happen. You want this to go towards zero, and avoiding that event will allow for that to potentially happen.
Right. Implied volatility historically is a lot lower in the option series that expire before that earnings event. So good point there. And thanks to Alex Coffey, Senior Equities Contributor here, breaking down markets with us in Home Depot. We're coming up after the break. Kevin and I are going to be joined by Megan Brantley from Likefolio for a discussion on Wayfair and the data on the stock moves. The online home store has seen its stock snap back nearly 80% so far this year, but is down about 15% in September. Coming right back.
Okay, I'm out of the ones on the secondary account. I can reload on that one though. Still have the other ones on the trading account.
Consumer spending has remained resilient. Credit card debt's going up pretty significantly at this point, but Wayfair seems to have righted the ship so far this year.
Yeah, I think you're exactly right, and really sets up well for what we're talking about. This divide between winners and losers seems to be growing, and we think Wayfair is
stop trick.
really putting itself on the winner side of that.
Take some profits, stop on the rest.
There is
It's
macro
much easier just to
weakness
hold.
in consumer spend for furniture, for home
Keeps you from over trading and jumping back in too early.
Low turnover of houses, I think, is a major contributor, along with higher interest rates and all those things that we talk about all the time on here. But we're really seeing this potentially benefit Wayfair in the long run because, really a few things. First of all, Wayfair really seems to be outperforming peers in a really big way, especially in home furnishing. When you look at them versus Havertys or Kirkland's or Williams-Sonoma, we're really seeing good traction for Wayfair outperforming all of those peers. In fact, during the back-to-school shopping season, which we think of as a really important barometer for how a company is going to do over the very important holiday shopping season. That back-to-school shopping season, we saw Wayfair mentions increase by 18% with a really big surge during the back-to-school season, delivering a really consistent rise in website traffic. When Bed Bath & Beyond stores started to close, we saw Wayfair web traffic really start to grow. And the best part about all of this, I think, for Wayfair is that, strong back to school season, consistent uptrend in website visits, but they're also delivering a really positive customer experience. 75% positive in this sector is very high, especially compared to peers. So we think they're capturing an audience during a time of tough headwinds and delivering a really good value proposition. We think that's the recipe for long-term success for Wayfair.
Andy, a lot of the data, both from Likefolio's data, seems to hint at a turnaround or a firming up in Wayfair's business. Some of the financial data moving from a $300 million loss a year ago in operating cash flow to now $70 million positive. Some of their numbers seem to show improvement, but there's a bigger question, right? They've had trouble generating sustainable earnings over a long period of time. So the question is, we know it's getting better. The real question is it good enough, though? Is it good enough to buy a $50 or $60 stock?
Yeah, I think it is. I agree with you. We haven't seen that operational excellence that, sometimes we really want to see, but I think it's coming. What we're seeing is that during times where maybe the macro environment
saw another one on the trading there, actually.
Some companies can do very well. They can, cut costs
Head and shoulders
and not
maybe here.
disappoint their customer
We do have
base.
a bit of a rolling over.
And those companies, when you come out of it,
With respect to that resistance there for a third time. Actually, fourth time.
At least fairly early,
After the first high of the day in the morning.
Signs that Wayfair is doing just that.
So I'll look for puts.
Macro environment for the consumer. They're looking to save money. A lot of them are shifting towards an online experience like Wayfair.
Could wait for a break
Wayfair
of
is delivering in a really big way.
bottom
from
here,
a consumer happiness
or
perspective.
even here you could start.
That actually these kind of tough times and belt tightening could be a long-term very positive for Wayfair. But like you said, we do have to see some
I'm out
operational
in trading.
some continued expansion of profit and margins in order to just
Not on
be,
both, actually, yeah.
completely excited about this. But I do like it here.
Yeah, and if you look at price to sales ratio about 0.77, that's below its 5-year average of 1.37. So it seems like they're creating some efficiencies here, Andy. But I wanted to kind of go back to that story
GNS
that everybody's talking about, where
0.7.
existing home sales are down in the dumps, right? New home sales are still working out pretty well. But even in existing home sales, if you go through that cycle where, hey, you bought a new couch 5 years ago or 3.5 years ago at the start of the pandemic, maybe you're looking for something else. Does that come into your data at all where, maybe some people, instead of moving, they're just going to get a refresh?
Yeah, we don't see that as much. We think that cycle is a little longer in home furnishing than it is for things like consumer electronics. The TV that hangs on the wall at 3 or 4 years starts to feel a little older than the couch that's on the floor at 3 or 4 years. But that replacement cycle, will come eventually. And we think what we're seeing from Wayfair right now is very positive towards them to be able to capture that when it does come. And so I think, the big story here for us is they're doing pretty well in pretty tough times and probably getting very, very efficient at it. And so when things start to come back their way, like the replacement cycle you mentioned, or home ownership turnover a little faster, they could be in a really, really good position to be the big winner coming out of that.
All right, good stuff. Positive data here on Wayfair. Appreciate it, Andy. Have a good day.
Thank you.
All right, that's Andy Swan, co-founder of Lifefolio, breaking down the data for us here on Wayfair. Kevin, I was really surprised that this stock kind of rallied as much as it did through the first, few quarters of the year. This stock traded over $90 after earnings last quarter.
Look back 3 years. How about
If we get a break on this channel and then maybe a shoulder.
In the high 300 or mid 300s.
Right shoulder.
Yeah, we can all agree that maybe there was some valuation
possibly
misses
a little
there.
froth in some of those prices. Yes.
But I mean, to fall $30 since their last earnings event, and maybe that's some macro headwinds, the market impact a little bit. You see there's a 3-year one-day chart right there. So this little blip this year doesn't really dig into much, but positivity out of Andy.
September 18th was a weekday because Loop Capital came out and downgraded the stock. Okay. Or I shouldn't say they downgraded. They lowered their price target from 65 to 60, kept a sell rating on the stock. So the stock's been
breaking through that level
since that day. It broke pretty hard on the 18th of September. So all things considered, listen, I think that this stock, my lesson for today, the thing I'm trying to get across to our viewers today on this stock is the strategy, not necessarily up or down and Wayfair. I have no idea where it's going. But here's something to think about, Tom. They have earnings.
Look to get some more on a
November
retest
2nd.
this shoulder.
If you look at a chart
of
puts. Implied volatility going into their earnings, it
I
goes
like that
higher.
Entry though.
Right, from
kind of an
where
accident,
it is,
actually.
Especially where it is right now. So if you were to do, let's say, a 65 call calendar using the long, Tom, as
it is 12:30 also.
In the
we could have hours of chop.
Week, what I refer to this as kind of a pre-earnings play, where you buy the earnings week. It costs you a little more money because that vol starts high, but it stays high historically. Doesn't mean it's gonna. Doesn't we guarantee nothing on this.
More tempered moves to the downside if implied volatility.
But if you look at implied vol on the chart over a period of time, it's higher than it is here every time their earnings comes out. Okay. So what I did, I went out to November 3rd, which is their earnings are November 2nd. I bought the 65 call and I sold not this week but next week, October 6th, 65 call. Trading around $3.05, $3 in that range there.
Yeah, we have 290 here up on the screen.
It's moved up a little higher since then. So anything around $3 is where this is probably trading, Tom. But this gives you that $4.40 long Vega. That's theoretical. It's not an exact number. But if implied volatility were to stay firm or go higher, that would benefit this trade, right? So thinking about expanding your mind a little bit, thinking about we're about a month, about a month into November 2nd of when the earnings come out. Do a pre-earnings play where you're buying in volatility in the earnings expiration week.
Yep. Let's break this example trade that Kevin's got down for us. Buy in the November 3rd weekly 65 strike call. Those expire in 39 days. Then against it, you're selling in the near term October 6th weekly, which expire in 11 days. You're basically buying a 1 month wide call calendar to the upside on the 65 strike, paying roughly, we've got 290 debit. As Kevin mentioned, it's moved up a little bit. But if you pay a 290 debit, there's going to be a risk, $290 per spread. With your break evens, Kevin, on this one, just below $59 on the downside and just above $73. So while you're picking that 65 strike, you've got a nice wide range for this stock to trade in over the next 39 days to remain profitable on this type of trade. You got some assignment risk on that short 65 call that expires in 11 days also. But Kevin, this one also gives you that ability to roll or adjust that short call as you get closer to expiration, where you can buy that back, sell another call against your long November 3rd weekly 65 call, creating credits, increasing potential profitability if the market's open, liquidity is provided. But this is all based on if you think going into earnings, because that implied volatility on the option that you bought should remain elevated, and that's what you want, right?
Your hope for a long calendar is that the implied volatility that you buy on the longer dated option stays flat or goes higher, right? The trade would get hurt if implied volatility went down. This bets on the long-term implied volatility in that Nova option staying firm or going higher. If you don't think that's going to happen, then this wouldn't be the trade.
Right.
But we report on this a lot, how implied volatility rises into that event.
Yeah, and that November 3rd, they expect about a plus or minus $12 move in the shares either way, but this one gives you duration,
right.
I think, more than anything, and you're buying that implied volatility in the earnings option series also. So you got to take that into consideration also. So good look at an upside call calendar based on the back of like Folio's positive data. All right, Kev, let's take a quick break. Come back, we're going to take a look at Target. The big box retailer has seen its stock crater by nearly 25% so far this year amid inventory issues and changing consumer demand. Fast Markets coming right back after this short break.
Been sprinkling in a couple puts in there. I'll get some more if we can retest this right shoulder. Highs coming down some more there. Got one last larger channel down here. Landed on the ace. Perfect for a tilt. Tilted trade. Could have gone all in. Oh my gosh. Kidding me? Only one person? Got two pair. Watch. Two pair, yep. Oh, I got an ace on the turn. Got so lucky. Hey, Julian. Oh my gosh. Just flopped a full house. Gonna check this one through. No bluffs. Look at these guys. Got out a little feeler. Oh, it's meant to do 100. Do it. Dang it. That one sucked. No one called anything. 0 hero week? Is this the deadline? Because I flopped the full house. Everybody folded. A lot of bluffing going on here. I'm melting down a little more. Didn't really get a bounce. Fleshy flush on SPY. Dang, glad I got all those calls and put the puts. Just like that. Gonna close one of them there. I had to order to buy more, but it never bounced. diamond. Hey, psych you up. Overkill. Overkill.
Down 17% year over year. Discretionary products inventory down 25%. So if you're betting on a comeback, that might be a good reason.
Right, because they need to lower that because the consumer trends are changing. Right. Where Walmart was doing really well when Walmart was hitting all-time highs. Target was down 20% for the year, based on the back of that. Hey, they have the grocery side of their business was doing really well. And maybe they were executing a little bit better.
And it'll help margins.
Right, exactly. So they got their Target Circle Week beginning October 1st through the 7th, ahead of the second Amazon Prime Day, which is the following week. So they're trying to play this gotcha thing on holiday sales going into this. But I looked at a strategy here, Cab. Implied volatility has gone up, as you would expect when a stock has fallen so precipitously to 3-year lows. But at the same time, they've got earnings. That second week of November on the 14th is when they're scheduled to. So I looked at a strategy kind of different than what you looked at and from what Alex, where you give yourselves higher probabilities of success. Something directional out in the November monthly cycle, where I'm going to buy a call vertical here, Cab. And the strikes that I used, or I'm sorry, the January cycle, excuse me. Looking at the January cycle, 116 days till expiration, where I'm going to buy the 110 strike call, which is currently in the money by about $1.25, and then against that sell the 125 strike call. So I'm creating bullish $15 wide call vertical on this one, Cav, and I'm paying roughly about a $5.90 debit on this, $6 debit on this. Give me your take here on this $15 wide bullish call vertical, where basically paying about $6.
About $1.23 of intrinsic value in this vertical spread. You've given yourself more than 100 days up till January, so you've got time. This is a comeback story. If these inventory levels are real and they can put up numbers like George is talking about, this is a spread that would take advantage of that comeback story. And like I said, you've given yourself duration.
Yep. If you pay a $6 debit on that, that's your risk, $600 per spread. That can expand to $15 if it's above 125 at expiration. But Kevin, when you look at this, you have that ability by buying this vertical to get out of it at any time until expiration over the next 116 days. Gives you some flexibility if the market's
still in this buying channel.
I think this
didn't break out of it, so
giving yourself duration is the key here. It's
trying
a bullish
to
spread. It's
close
27
these puts.
deltas over the next 100-some days.
Yep, definitely a bullish directional play if you think we're going to see some bounces off these oversold levels on a technical basis. So a good look at that directional bullish vertical. All right, that's going to do it for Kevin and I today here on Fast Market. Stick around, though, right here on the Schwab Network.
Stick around.
Next Gen Investing's coming up.
All right, just put a stop on those last couple contracts on the puts. Don't have to mess with it. Good profits on most. Nedebel language? The Bell language? How do they speak that? In Namibia? I folded. South Africa brew. I don't know how to say it. Is it Nedebel? Just the belly.
Huge moves, not really here on the board, but huge names to kick things off with some mega caps, and we got some pre-earnings looks at a couple others.
Right, so we'll start things off with Microsoft here, which actually is tracking for its longest losing streak in nearly a year, basing back till September of 2022. So quietly seeing some weakness today and also weakness this month, down about 3.5%. Guggenheim today upgrading shares of Microsoft, though, to neutral from sell and removing their prior price target as the generative AI narrative is too positive of a force to contend with, which to me, you are so late to this trend here. But they did say that even with the troubling dynamics they thought might develop, as they said they did, with Windows having continued to struggle and Azure's growth continuing to struggle, incremental traction in their Office business, as well as some cumulative impacts of their price increases, as well as renewals being partially offset, All of that considered, they said, meanwhile, less than 3 weeks after the firm had previously downgraded shares, Microsoft webcast its own demonstration on ChatGPT. Like every other person on the planet, they've come to expect that generative AI narrative will be more than just a story. Conversations with investors, they said, indicate that more than a small minority believe that Microsoft will be able to realize all of the monetization potential that generative AI can be mathematically derived. Well, the firm does see some of this risk already baked into their assumptions. They view the company's overall status as a vulnerable name that can leverage multiple times past what they had been previously expecting as a real outcome here. And again, Alex, to me, the fact that they had a sell rating on shares and now say that they could see a real impact from generative AI is like, where were you in January of this year?
I think I see it that's sort of what they say. They kind of say that investors are too optimistic about this still, though. They think that they're going to squeeze out every little piece of profit they can from this, and that's just too optimistic. Yeah, maybe they were a little bit more pessimistic on the reality of where AI is right now, but the market got excited and was trading on hype. One thing's for sure, though, seemingly this analyst is just not in tune with Microsoft right now. They upgraded to hold stocks lower, so fade this analyst, it appears, is the move.
Well, and I guess I understand their point that perhaps the hype was overdriven, but that was also like 3 months narrative because we've already fallen like 3.5% from the peak we saw over the summer. So I just feel like overall they are a little bit late to the game here. Our next name today, though, is Meta Platforms, and Meta has actually fared what has been a volatile week in big tech quite well. It's still up around 0.3% month to date, which is amazing considering Apple's pulled back, for example, like 7%. But Meta is planning to release an AI chatbot as soon as this week with distinct personalities across the social media apps as a way to attract young users. This is according to a report we got out of the Wall Street Journal. Now, these generative AI bots are being tested internally by employees, and the company is expected to announce the first of these AI agents at the Meta Connect conference. And these bots are meant to be used as means to drive some overall engagement with users, although some of them might have productivity-related skills as well as the ability to help with codings or various tasks. So this is going to be exciting. I think an interesting way to attract new users, because I think that right now the thought is that there's too many bots, there's too many automated systems on these social media platforms, but will be interesting to see what these look like with the distinctive personalities per social media platform. I cannot wait to see how this looks, Alex. It always is interesting to me when you see AI bots on Meta. It's like, move away from the metaverse. That seems to be working for you.
This is an interesting one. I'm sure I'll hear all about it from talking with you when we go through this in a couple weeks. But I guess what I'm gathering from this is they're creating these to hope that users will interact with them as like friends. To me, that doesn't seem like I don't know. That's not the direction I want to see the world go.
That's the loneliest thing I've ever heard.
I don't want to see the world go that way. I'd rather, at least the ChatGPT was answering questions. You could make it do some calculus, then you got bored. Mm-hmm. This just seems either it's repurposed that, or we're getting deeper and deeper into being a recluse.
Yeah, I mean, go meet people out, go play outside. I mean, the whole thing is I can't wait to I want to see how this looks before I can make any judgment. But it doesn't sound like it's necessarily the most social.
Can I say one more thing about Meta too? I mean, this is another example of them just lacking creativity. This is ChatGPT repurposed the same way Threads is Twitter repurposed. So come up with something new. I mean, Facebook changed a lot. Instagram was purchased by them. Threads has been a flop. What's to say this is going to be anything different? I got to see more.
My gosh, and what happened to Threads?
Look at that green candle.
What was always going to happen to Threads?
Wow.
I have to say that you were right. I was really excited about Threads, and that completely fell off, even though I never actually got on Threads. I was just excited about the concept. Our next name today is CarMax here, which does have earnings expected Thursday before the market opens, and this name has seen some volatility. I mean, we are up 29% this year. We've pulled back about 10% from highs. That doesn't even necessarily paint a picture, though, of the volatility CarMax has experienced for the better part of the last 3 years. They are gearing up to report their quarterly earnings later this week.
I think that stock might put out.
To be, I'd say, some say is sort of inflecting towards some growth as far as their market share performance goes. We have seen, again, some overall recovery in shares, but Wedbush actually says they continue to improve enduring retail GPU strength and fixed cost leverage. This analyst did upgrade their rating for CarMax to outperform from neutral with a raised price target to $90 a share from $85, saying their underperformance versus the retail used car industry has narrowed to an estimated 9 percentage points in this fiscal second quarter, for which results will be reported this Thursday. Indeed, they did say they are looking for some modest units growth consensus to upside, which is right now calling for a decline of around 7.5% versus
if it breaks this upper channel, that's kind of what I'm waiting on.
But more importantly, they do see comps now turning positive in their third quarter versus the 3% estimate on easing comparison.
Yeah, today's crazy choppy, huh?
Industry growth
I mean, it's all, if you can look at it, it's all on this bullish channel.
Pressures actually that CarMax should be able
right?
to deliver retail.
But yeah, it's just crazy chop through it.
$2,300 in their second quarter.
There's some lows and the highs. It just happens with volatile candles.
Half of this year. All of this, just to me, Alex, to summarize, is basically a bullish report on CarMax into their most recent quarterly results, which again are expected this Thursday. So we'll have to wait and see what those results mean. But I'm excited to at least preview an earnings name because we are very earnings light the rest of the week.
You know,
okay,
CarMax
I did break it there.
And
I got
Nike
some.
last week are going to test my theory that the more the story starts to become the conversation before those earnings, if the company actually delivers what this analyst lays out, you might see the move before and set up a buy the rumor, sell the news. The same way there was a lot of pessimism on Nike last week. Stock was under pressure. Did you see a sell the news or sell the rumor, buy the news situation set up in Nike? We're going to test those theories this week, no doubt about it. I think this is another one of those examples where ever I get an analyst comes
it's like
out
right at that
and
resistance
put their chips on the table before the earnings event, I think that takes a lot of conviction.
False breakout, maybe.
So I always pay a little bit more
Not
attention
enough of
when they
one.
do that.
Me too. I think it takes conviction, but also I
Might
just
need a little
feel like
pullback too. That was a
we should
crazy
follow
move up
on
to there.
These pre-earnings calls and see if they were actually right, because it takes conviction, but also the market is one that's quick to forget, I will say, especially when it comes to mistakes. Our last name today, though, is Carnival. Carnival shares have pulled back quite substantially, down about 28% from their high. They are expected to report this Friday before the market opens. They're still up, though, 74% this year, which does still make them one of the best performers in the S&P 500 this year, just behind Royal Caribbean, which remains the brightest spot across the cruise line operators. But they're expected to report quarterly earnings of around 75 cents per share, which represents a year-over-year increase of 229% on revenue that are expected to be up almost 56% year-over-year to around $6.7 billion. To me, this signals the fact that, like we always say, Alex, this has been one of the most beaten up industries from the pandemic we've really covered. What other industry was nearly entirely shut down other than cruise lines? I mean, so to see these figures of 230% for their bottom line is, to me, speaking to the recovery, not necessarily outsized growth. But we are seeing over the last 30 days that their earnings estimates have been revised almost.
Yeah, why would I get a heart?
Which signals only
Spy
further
breaking out there.
upside that the street is feeling about
Real-
this name. That's
real
pretty
breakout.
unusual to see 10% upside revision just over the last 30 days in a name that's pulled back 11.5% over the last month. I mean, so to see analysts still feel optimistically despite the recent weakness is a really interesting, I'd say, divergence.
Two things that stick out to me on this. I don't think I've ever seen this particular name or any of the cruise liners down 4 cents is all. These things are usually moving like 5-10% a day, it seems, unless I've just been sleeping under a rock, and that was a couple years ago. But these things seem to
Done with this table anyways, you can call it.
But also, I understand, I'm the first to say it, their businesses were disrupted more maybe than any other business that we can think of. But how long are investors going to just give the benefit of the doubt and have the patience to stick around? Like, the further removed we get from the pandemic,
okay, well, we're
into
still
the
on the bullish
future
channel.
with their business
It has been
operating,
confirmed.
how long are you going to let them burn cash? They
Chopping or
gotta
getting to the
start
top?
showing real profits,
Don't know.
or at least show a path to that, because they took on so much debt, issued so much stock to get through the pandemic, and they're not even improving the situation. It's just not as bad to the point where they can survive now, I guess.
Right, I think that so speaks to the way that the market can frame things, because at what point are we going to acknowledge the fact that this company is not growing at all versus pre-pandemic levels. Like, you're right. At what point will we run out of patience, all things considered? Maybe you just look at the 74% move higher this year, though, and you say that's been good enough for me thus far. But we'll be looking more at the technicals in that name, as well as some
There's
example
that
trades,
shoulder.
as well as our other pre-earnings look, that being, of course,
Need to break there and break high of the day, or
technicals
we
in
are
both of our
choppy.
votes, as well as some ways to potentially trade these names into their earnings events coming
Can
up
I?
next. Stick around. Next Gen Investing will be right back.
I have quite a bit of moves today for only being 115. We've gone both ways like 3 times. What, calls in the morning? Got chopped some in here. Can't remember which way. Got calls here. Got a little chop here. Got puts here. Now I'm back into calls. Closing one of these here, scaling out a little bit. I think we could keep ripping. I just take some profits. A wee bit. Trying to call my bluff any chance he gets. He didn't like me bluffing him the other time. Funny. AMC new high there. Breaking out of that resistance maybe. Getting some more profits there. Stop on the rest. How big of moves both ways it makes probably get stopped. Let's see. I like it to the long side though. But it needs to break out of here. We're just still in the chop.
Yellow 21-day, orange 63-day, purple 252-day exponential moving averages. The moving averages themselves all starting to slope downward as well, which suggests that the trend has shifted from upward to sideways to downward now here. It looked like we were potentially going to recapture that 252-day EMA in purple there this morning. We opened above it, but we've fallen below it pretty convincingly so far. One potential bright point is that the 77 line here, these old intraday lows, this green dashed line, we are still hanging on above that point here. We did dip below them on Friday, but we've made a bit of a bounce back here. So overall, trend is down. Looking at our conventional way of looking things here, our moving averages and our trend lines, Jenny.
So now as far as momentum of the trend goes, walk us through what you're seeing looking at RSI here.
Well, not a ton to talk about with RSI here today, but one thing that I did want to kind of point out is that you can see here we established some lows. Then on Friday we established lows beyond.
Barely had a higher flush on that guy.
The RSI matched up with that. Lows here, further lows there. And we did not cross into the oversold area, which is another,
thought about jumping all in there, but I figured he probably had a flush.
Into the oversold area. That would be a further bearish sign here. That would be
another
lower piece of confirmatory evidence that could be kind of dangerous if you were bullish in this name. Couple that with breaking below this supportive area that we had here. That would be something to really be on the lookout for. Would be a break below support and a break into the oversold area at the same time, Jenny.
Yeah, so as far as now price activity and some key levels to watch here, support and resistance, tell us what you're seeing.
Well, like I said, trending downward here, and our moving averages could be key, especially our purple 250 2-day EMA right here. That would be kind of the pivot point today for the very short term at least. A close above that level would be more positive. It's looking like that may not happen at this point here, but we still have a few hours till the close, so something to keep an eye on there. That would be 79, right around there, one area to watch. If we continue to the downside, that 77 area, that green dashed line where we had our old lows, and we've also got our lower trend line there, so maybe let's call it 76.50 to 77. That would be the support zone to keep your eye on, and then further declines could be in store if we make our way below that point. To the upside, right about here caught my eye, roughly on top of each other there are two moving averages, yellow 21-day and orange 63-day, right around the $81 mark. That could be a resistance point to watch here. You look for when multiple indicators line up in the same point. It adds kind of extra weight to that price level. So that's one of these situations that we have right there.
Right, so difficult to pinpoint the overall trend of this. I mean, I know we're sloping to the downside here, but we've seen some areas of strength and some volatility following CarMax's earnings. So we have to obviously be mindful of that when they report, but great breakdown on CarMax. So now in trading
continuation either way so far.
So you're thinking, considering we're slightly trendless in CarMax shares, maybe leading into a more neutral example trade.
Sometimes I like to explain things with a bit of symbology or analogies here. Imagine this is a battle of tug of war, if you will. And if the Bears are on one side, the Bulls are on the other side, how many different ways can tug of war go? Well, once I could just let go, it goes flying. That's sometimes your earnings reactions, if you will. Sometimes it's just a stalemate, and this seems to be one of those situations where it's a bit of a stalemate. The fundamental picture,
stuff out the rest of those calls,
starting to warm up a little bit. Got that.
Like we might be getting that head and shoulders.
Nothing that Rick said got me super excited on the technical front. Downwards trend, kind of breaking that more longer-term uptrend. So it kind of clouds the picture. If you kind of imagine this as a game of tug of war that is maybe in the middle right now, a neutral strategy is the way to capitalize on that. And so we're looking at that neutral strategy around earnings, selling implied volatility that's a little bit heightened, looking to capitalize on it. So going out to October 20th, selling the 70.65 put vertical alongside the 86.91 call vertical. Those strikes are both about $8 away from the current share price, so equal distance. Break even, simply take that $1.70 credit away from the short put at 70 and add it to the short call at 86, and you get to 68.30, 87.70. With this strategy, as the risk profile illustrates, as we pan in there, you can see its best case scenario is in that middle area. So again, this idea that this kind of stalemate game of tug of war continues, it stays between our bounds, you're going to see max profit potential at that expiration date if you're able to do that. $1.70 credit is that max profit potential. There is risk though, so if one of the sides does let go and you do see a big move one way or another, there's risk to the downside and the upside. That risk is $5, the width of the spread, net of the $1.70 credit, you're left with $3.30. So $3.30 in risk, $1.70 or $170 in risk, or in max profit. Neutral strategy, one that is looking for boring, Jenny, looking for this game of tug of war to remain a tie.
looking for this week to sort of hang out exactly where it is. Although I will say that we are seeing the 4 major indices all in green as we speak. So at least they were looking into that optimism. But now to shift gears here, Rick, and look at Carnival. Now, Carnival has seen a more significant pullback, no doubt about it, but still, it is still up 74% this year. And I keep harping on that because it feels like the overall sentiment in so many of these tourism names has reversed. And it's like we forget about the sizable gains they had already made leading into this month.
Yeah, like you said, we're up 130% off those yearly lows, so significant recovery in these names. And it's important to differentiate it's after a very severe downward price movement during COVID here. But, you know, in the short term,
might be trying to slope him. He might have that straight.
We had our highs near 1955, kind of similar to our last chart. I was able to draw
I gotta check this one down.
Sloping trend line, and I extrapolated it and put it across the lows. It matched up pretty well. So once again, not going to work every time. In this case, it did kind of give us this point on Friday where we bottomed out and then we slipped below it today. Now we've recovered almost back to that line, so old support can become new resistance. It'll be really interesting to see whether this name can work its way back within the boundaries of this channel or if we're having more of a downside breakout. So you can see in terms of the overall trend,
AMC moving
looking
up.
at our moving averages like we always do here, we can see our yellow 21-day and orange 63-day are both sloping downwards rather significantly here. We can see that the faster moving average is outpacing the slower moving average and starting to diverge farther apart. The downtrend is still in full swing here. We can see our long-term moving average, our purple 252-day, more sideways than the other ones here. And this one is the most significant one. It's like, imagine the 21-day EMA is like a speedboat. It can turn real fast, but it's the kind of the least significant one. This one's more like a cruise liner, so to speak. It's something that'll take a long time to turn around, but when it does, it's the one that's most worth noting. So the shift, even if it may not seem significant from upward to sideways, is worth noting here. So overall, trend is not looking real good for the bulls here. We broke below our trend line. We are recovered a little bit.
Nice head and shoulders there on the 5 minute. But we are still in this buying channel, so
line here, that represents our post-gap lows that we established. So
break out of
that
that
was a support point I had my eye on here. It's looking like we're holding that right for this moment, but who knows? Anything could happen here.
So as far as momentum of this overall trend, especially momentum of the trend to the downside, what are you seeing?
Well, another thing that I like to look at with the RSI here is look for where it could make support or resistance areas similar to price here. You can see that we bottomed out in the same point a couple times here, but at the same time, price was trending downward here. So price is always the more important thing. I was curious if this might have resulted in some bullish divergence, so to speak. Momentum staying stable as price is trending downward here. This was not the case though. So look for these trend lines and these support and resistance lines to be invalidated for clues here. Sometimes the invalidation is more important than the trend line. You know, we can see here that not only did we break through the trend line, we crossed into the oversold area, which is a bearish signal here. So a break below support and a break into the oversold area, never a good recipe for the bulls.
So as far as some key support levels and of course resistance to keep on your radar, what are you watching here?
Well, we got a bit of a bounce at our purple 252-day EMA like I was discussing earlier here. Once again, you know, just like our last chart, this is going to be a key area to watch heading into the close, this area near 1362. It's looking like we're more comfortably above that point as well as above the gap level that I mentioned here, this red dashed line. So between about 1360 to 1385 was the support zone that I had my eye on. We're a little bit above that, but we still haven't made our way back into the channel, which is not a good sign.
Pocket threes took it down.
Overall, trending downward, breaking downward through support. You know, if we keep going lower, 1219 was a level that caught my eye. All the way back here, we had some highs and a little bit of congestion around there. So that could be one area to watch. To the upside, once again, we've got our two moving averages relatively close together. 1520, 1550, around those points are some areas to watch.
All right, great breakdown on these names. We will leave it there. Appreciate the technicals. As always, Rick Ducat, our chart master. So now in trading this name, Alex, walk us through a different way to play the earnings events this week. Carnival has looked
head and shoulders
much
is pretty
stronger
obvious.
than CarMax just based on its year-to-date percentage performance. Seeing a pullback as of late, though. So walk us through then a more bullish example trade.
This is one that's a directional look at it. So if you have a different opinion, you got one that's a little bit more bearish in line with the technicals, you could certainly look at something structured this way to
Turn his mic on.
Side. But when looking at this, Jenny, I want to talk about the fact that you talked about earnings, the earnings results improving on this one, and at the same time the stock has been going lower. When the stock's been going lower, at the same time
it was your fault.
Earnings revisions have been going higher. That's a weird divergence, right? It's a fundamental picture is improving, but at the same time, the actual picture in terms of price is getting worse. And so I saw this as an opportunity potentially for someone who is bullish
one last final level to break, and then we should see a full inverse cup.
14.5 call vertical, 75 cents, $75 in risk, $75 in max reward. Break even, you simply add that 75-cent debit to it, $13.75. When looking at this, though, Jenny, as I said, the tactical picture was a little bit more bearish. If you have a more bearish look on this, look at this on the put side as well. Look at something the other way. But bullish look at it, speculative in terms of direction, but risk defined nonetheless, and one that will capitalize an upwards move.
And one that looks to maybe see a rebound in these overall tourism and, of course, cruise line related stocks, as Carnival's not the only one that's seen this sizable pullback as of late, but that does it for this segment. Now, coming up next, it's time for FOMO, so we are revisiting a
break
name
on
that's
that level.
discussed on this show that is all things Amazon. But today,
Get the
with
VWAP.
the news of a pretty sizable investment in an AI-related company, Anthropic. We'll discuss that and more coming up next.
See if we get a continuation somewhere. Kind of had an upside, but it's just been in a huge range. Okay, coming back down more. Why are all 7 people on this table? This guy have? Does he have a 6 also? Try and isolate him a little bit. Does have a 6. Oh, we got an 8? Oh my gosh. I guess these guys called, so that helped me out to beat them. That green candle on SPY. Holy green candle. Wow, we are still in range, it looks like. Volatile down here. Holy crap. I guess there is a straight flush out there too. But I probably have the best hand. I mean, doesn't that still mean I have the best hand? Yeah, okay. Max 7? What? Maybe he thought those hearts were diamonds. Alright, SPY's come down some more here. Probably leave after that hand. Grab their chips and run. Get this straight. Let's see. Jack 8 is the same hand as me. We had a high card. Awful kicker. Like me. Good. Raised. Getting down here. Let's see if we get a VWAP. Testeroni. Head and shoulders up there. Yeah, I just grabbed puts. I didn't wait for a nice retrace. Head and shoulders was too obvious. I should have bet. Oh my gosh. Very close to the best hand here again. I guess there could be a full house out there too. And an ace. High flush. No, full house could be out there. Yeah, Jack 8. Yeah. I'm gonna take some profit here. Given the chop we've been stuck in.
Line, and that's what the bearish take on AI is. It's not that there's not things going on in AI, it's that it's not bringing revenue in at the moment. It's not bringing in profitability for shareholders. And so this is where patience comes into play, and this is where the hype has certainly gotten ahead of itself. The hype is way out there on what AI might do. However, it's doing something, but that something is building towards the future.
King would have been nice.
And so where the hype is versus what the future looks like is still unknown, and that's really the trade when it comes to AI. Amazon's got a lot more going on than AI. There's no doubt they're going to be one of the key players in AI, and they're also fortunate enough to have a tremendous core business or 2 core businesses that make a ton of money, they're going to be able to invest into companies like this. And, you know, the hard work of others is going to be for the benefit of Amazon and other mega cap companies that are prepared to buy them as they're on their come up.
I think that's a really good point. And I think that right now it seems like a lot of these companies, it's just like an add-on bonus. Even like ChatGPTs, I mean, you can access it without paying a cent. So it's like companies need to figure out the best way
AMC
to
is at
utilize these
9.3.
programs. Maybe why we're seeing Amazon Prime now charging $2.90 or you're offering $2.99 to avoid those ads, because somehow they're going to have to start paying for some of these AI offerings, whether that be in their Prime Video service or just their AWS service overall. But when trading this name, Alex, we have no major catalyst coming up. We have their earnings cycle, which was really positive, like you said, behind us here. Name's been outperforming. It's pulled back as of late, but all things considered, a relatively resilient name, even more resilient than Apple this past month.
This name really began a downward trajectory after that first leg down in the first half of the year. It made a summer comeback last year, post-split, and in about the middle point of August, so let's call it 13 months ago, is really where things turned down. They turned down from about 145 a share post-split. This most recent move, pop on earnings up to about 143, a little bit of weakness, a run up back to 145 again, and then the macro story takes hold, and we see the entire market move lower, bringing Amazon with it. If you're bullish on Amazon, if you like the story that Amazon presented during its earnings, maybe you see a run back up at that 145 level. Who knows if it'll be able to break through it, but even a test, this strategy will benefit
bouncing
from.
back up
So
there a
look at
bit.
buying a call calendar at the 145
Oh.
strike. October, November, selling October, buying November.
Chop is aggressive, man.
$2 debit on this means $200 in risk.
Still
This
hasn't
is
broken
a
out of
strategy,
this
Jenny,
channel.
where we talk about it every time.
Bullish channel.
Precision is
Thought we were
important.
breaking out of it here,
I
but
laid out
nope.
the reason why someone might select 145 as a target, but if you had a different one, a different strike
Broke out of this
selection
one.
may be in order. But
Reported
for
this
those
one.
who are looking
See if we
at
get a little head and
the
shoulders here now to
145
break
call
out of it.
calendar, here's a look at the risk profile. We talk about these time spreads all the time. They peak out like mountaintops at the strike, and then there's risk in both ways. So you have overshooting risk, and you have I never get to that strike to begin with risk, which of course is on the left-hand side. So in this case, it's a bullish strategy because Amazon's sitting at 131. The 145 strike is above 131. So you need a rally here. Need about a 10% rally here to get back to that level. Not outside the realm of possibility for a name like Amazon, which was just there a handful of sessions ago. $200 in risk, though. Really looking for this to grind its way higher, leading into that October 20th expiration.
Yeah, and I think that's really well put. And a way to play to some of the upside while also being prepared to some of the downside risk, which we know we've seen in a lot of these big tech names, at least as of late. But that'll do it for our FOMO segment. Now, coming up next, we will talk the latest with the WGA strike, as we have seen a tentative agreement reached, so definitely being seen as a positive, although we're not necessarily seeing that reflected in some of these share prices today. Renita Young will have more on that story for us coming up next.
SPY might be doing a little head and shoulders here. See if you can break this final support. Looks like it's going to right now. Oh, problem is it's so close to VWAP now too. But if we do a complete inverse cup, we've got pretty good risk to reward to the downside. Which I think if we break out of here, that probably is our next price target. So might add to my puts. SPY still bouncing on that line.
But what else is there to take away from this?
Two things I want to say.
But lots of head and
First off,
shoulders
it's
all over the
definitely
place.
impacted the actors and the writers in a big way. The companies, however, we got a number of how it impacted Warner Brothers Discovery, and they said that it will reduce earnings this year by $300 million to $500 million. And then another thing about it that is interesting to note, analysts have estimated that studios, they're going to lose as much as $1.6 billion in global ticket sales from movies that would have premiered this autumn, but they've had to be stalled because of the strikes.
And oh, go
well, I was
ahead.
going to say, were they stalled because we're slow rolling some of these things on our way out because we know there's going to be this gap down the line, or are they just not done yet?
You know what? I would bet it's probably a mixture of the two, you know, because some productions started before strikes and then they had to stall. But you're right, it could be that as well.
You know, and what's interesting to me to see is a name like AMC that has seen, I mean, it's down like 90% over the past month, rocketing higher today. And I know Adam Aaron tweeted about this, capitalizing on the fact that this is a huge win for some of these cinemas. Cinemark's also higher today. And I'd say the movie theaters need a win pretty much as badly as anyone. Alex highlighted Disney hemorrhaging money, as we know, with some of its streaming companies. But the movie theaters have also been hemorrhaging themselves just based on the fact that all you hear is box office is back, it's back. It's nowhere close to back to pre-pandemic levels still.
People forget that this is where it goes down to, all the way down to the movie theaters. Actually, it goes down to the movie releases in your streaming platforms. But that's another really important piece of the puzzle that you noted. And who knows how much more impacted it has been, the movie theaters themselves.
Right, because they also need a win very badly, especially when it comes to their content slate. Because I know there's been some good, Barbie, Oppenheimer, Mission Impossible. Hasn't been enough, though, to lift their sales because they need a very strong catalyst.
Yeah.
But all things considered, this is a win today, no doubt about it. So a small win, a small step in the right direction for the Writers Guild. And we'll have to see, of course, if the actors can follow suit. But we will leave it there. Appreciate the insight. As always, Renita Young, Senior Markets Correspondent for the network. Now, coming up next, it's time to look at Cleveland Cliffs, as the shares did catch an upgrade today, now up around 3% here on this session. We'll discuss that more with George Tillis coming up next.
Cleveland Cliffs. I don't think I've ever heard him talk about Cleveland Cliffs. chopping around. Let's see who's making this move. I averaged into a couple puts there, but I got scared and stopped. There it is. There it is. Move to VWAP. Don't do this. Do it. Come on, a little horizontal support here. Trying to hang up. Closing some there. Jeez. Wow. I'm just not fast enough with this for this volatility today. That's crazy. Like one step faster than calling in to place my trade. One very small step for trader's kind. Holy rocket a moly. I like the head and shoulders still. I think we'll come down. Just big candles. And by the time my trade actually filled, we're probably halfway up, back up that green candle. That might be the bottom of the bounce too. This chop is wild. Volatility's back. Not always in the same direction though. Gosh. Look at this freaking volatility today. No decision. No decisiveness. As decisive as it's ripping, comes right back down. I'm somehow doing very well today though. Just caught this, trying to catch this now, but see, got that. Got that. Get him out of that table. Oh well, it was time. Yeah, I'm out of those puts.
For about $32.60 a share. So
I gotta wait for
the
actual
really moved
direction to change. Need a break.
From raw materials
I'll break on VWAP.
to finish steel, now inclusive of if the acquisition does go through into steel that is utilized for a lot of construction and of course infrastructure in our country as well. Now, if you look at the stock price, it's reasonably, it's been moving higher this last year, about 11 or so %. Citigroup actually came out and raised their price target to $22, and they actually see the flat rolled steel prices stabilizing and in fact increasing to about $800 per ton going forward in the next couple of quarters based upon inventory drawdowns. And also average selling prices are increasing. If you look at 2022 to 21, volumes were down, but prices still are firm. And I think that's, again, beneficial to the business, but the stock really hasn't reacted too much to the news. And I think it has to do with the fact that we have a core business for Cleveland-Cliffs, but at the same time, we have to deal with the acquisition of U.S. Steel, which in a nutshell is about $7.8 billion, and it's estimated about $3.9 billion of that is cash. And if you look at the balance sheet of Cleveland-Cliffs, they don't have the cash. They have about $34 million in cash. So I suggest there's some balance sheet pressures contingent upon the
candles
acquisition,
back down.
which I surmise they can do. They're just going to have to raise the capital to do it. And I think that's another thing you got to keep in mind as an investor in this company right now.
George, when looking at this type of a name, how focused
Big
does
old
one
candles
have
every
to
way.
be on macro picture, on sort of commodity cycles?
Yeah.
This seems like something that's going to be extremely sensitive to sort of where we are cyclicality, in terms of cyclicality of the economic cycle.
So I was just going to bring up cyclicality. It's extremely important in this business for this company. I think at the end of the day, if you just look at average selling prices, they are going to reaffirm or firm up going forward. Just think about the U.S. Auto manufacturers and the strikes they're having. That will be rectified eventually. Just think about the demand pickup alongside that. In other words, if the unions get what they want and everyone's happy, they're going to work really hard. And I think that's going to cause a higher demand for flat rolled steel, which is used in of course, production for automobiles primarily. I think at the end of the day, too, the cyclicality makes a huge difference because you'll notice that there's
we're
going
still
to
in
be
the bullish
cyclical
trend, so
spikes because of prices that are
calls
firm up,
might be
plus
on the
inventory
table.
drawdowns. But right now, I will say this: will it happen again? It sure will, but I can't tell you when. So just look at a 20 and a 10-week and a 20-week moving average. If the stock is trending above both of those, that might actually demonstrate a pickup from a cyclical standpoint in the stock price, because these are stocks that actually perform quite well once the cycle starts to reverse and firm up in prices and volumes. But just right now, looking at it, it's still stationary, so I'm watching it for potential
See a new high on the day.
reversal.
Do
I
it.
think a really good point made by both of you, the way that this company has a cyclical nature to sort of keep on our radar here. But really great breakdown, George Tillis. Appreciate the insight as always, contributor here for the Schwab Network. That also does it for
Folded
Alex
threes.
and myself for Next Gen Investing. Coming up next, we have the watch list.
Seems kind of crazy, right, Guts? Kind of crazy. We got all of that crazy price action last week, volatility, volume, it all picked up. So this is just spilling over into today, where it's just like, Volume today's gonna probably be pretty gnarly. Did I re-raise this guy? I'll just call him. Do it. 4 A's, nice. My card, baby. Thought I was sick of getting bullied around and went to bluff him off on the river. He's going for it again. That was my first losing trade, I think, on the day. Other than this morning. I maybe had one. But those puts I just closed out of, flip to calls. My channels are not quite right. There's a lower one here. this level. Yeah, what do you know? Look, we expected it perfectly. Well, it's this guy, huh? You try and still play me now, watch. Oh, he didn't have it. Look how that... Oh my. Should have moved that sooner. Didn't even notice. Wasn't you were low there. That's a parallel line with these three tops up here. Come on, Spy, wake up. 2 o'clock. Time. Fish raise 360? 2 pair? Hearts? What do you got? Here you go, Spy. I don't know. This guy's probably got 2 pair. I haven't played with him enough. I don't know what these people do. I call it down. All in, let's see it. Yeah, 2 pair. He didn't have it on the flop. Did he start raising on the flop? Here goes Spy. I've got this little channel to break out of. Gonna do it. I'll close one here just in case. Closing another one. I like to break out, but I don't control it. That was an aggressive raise. Whoops. He probably has clubs. Just call, slow it down. Slow it down, let me slow it down. Already beat me before. You probably have 2 pair again, don't you? Jeez. Jack 5, you do have 2 pair again. Ah, and you got that on the river. On the turn. The flop, you had nothing. I gotta stop letting people see the turn. Closing more. Just got this 2 pair twice in a row. Okay. I guess now we get a break of this, I'll add. That's what you have to do when it's so choppy. You have to trade choppy. Okay, add into my calls there. Is it false? Yeah, I'm out of those. I think. Take it out. Take it out. Couldn't get puts here. We're in the top of the channel after all. But Yeah, I got no puts. It's just so hard to trade on such a choppy day with this brokerage, this platform.
We believe in the market.
So what would another rate hike this year, like the Fed is projecting, mean for the consumer and ultimately for the probability of a recession? Is that what tips us into a recession?
So I think there's definitely the possibility of a recession at this point. You know, credit card rates, as an example, are already high, 20%. Plus, I'm not sure how much of an increase we'll have on that. They're already up there. And obviously, as I said earlier, credit card debt is up. So, I think we're running the risk of getting into and I know that you've had other folks on talking about it, stagflationary environment where you have slower growth with inflationary pressures. So that's clearly something we're keeping an eye on.
Oh, he called.
So you mentioned some
The pair of
skepticism
nines.
around the Fed's projections in terms of the other hike this year. What about the 2 cuts next year? Do you think ultimately the Fed is going to cut rates more than 2 times?
Well, I mean, they're obviously watching closely as we all are. I think that the rate cuts that were forecast in may happen, but if it's going to happen, it's going to be later in the year or early in 2025. That's what I've been reading from a lot of the experts.
So financials have fared better than most S&P 500 sectors this month, but they are still negative
Jack
on the
Queen.
month, down year to
Well
date.
done, sir.
What's going on in the banking space that has financials so out of favor with investors right
I want
now?
this guy
Because
back.
ultimately, higher rates were
My
supposed to
chips
be a good
back.
thing.
Well, I think there's a couple things in the banking sector, particularly. First of all, there's still the risk of credit issues that are out there. I
Just
know
getting
there
dealt
are
cards,
been some
man.
people, some of the CEOs at some of the regional banks have come out saying that they don't have any issues in their commercial real estate portfolios, for example, but I think that there's still some worry there. Banks have been challenged as far as their ability to gather deposits
again.
and to generate positive loan growth, which is, obviously growth has an impact on profitability of these banks. You're starting to see some expense cuts, which usually is a pretty bearish sign when it comes to the banking sector. And then, a big part of what's driven bank stocks up over the last, 3
my
or
heart.
4 years, frankly, has
Ooh,
been the M&A
nice.
M&A business, and
4.9.
not necessarily them as advisors, but banks just
6.9.
being acquired. And right
These are
now,
great.
M&A activity, although it's picked up a little bit recently, frankly, because banks are looking for partners when the business isn't going as well. It's an easy way to combine and you remove duplicative costs. But the M&A business, the M&A world of banks merging with each other has really slowed down to a trickle. That could pick
I have
up
to.
here as you start seeing banks
I
having
got this
credit
straight.
issues, becoming a little bit cheaper.
Would've won.
Obviously, the one problem with all that is, bank stock prices are down, and it becomes a more expensive proposition for an acquirer to buy somebody utilizing their stock.
I know we have a guest coming up later on the show that's an M&A bull for 2024, so we'll get to that a bit more later in the show. David Bagatelle, Credit Sesame, thanks so much for sharing your insights and expertise. Really appreciate it.
Thank you, Caroline.
Coming up next, why a stock that's down more than 40% this year could be an opportunity to consider. Stay with us on Schwab Network. We'll be right back.
I remember when I first started flying, and we
Odd size to raise. Oh, Nicola. It's Maldirect. Maldirect's up 13. Nickel's up 11. He's back with more. Got like a head with a double shoulder on both sides. That is neat. All in again. This is actually a bullish formation though. I think. Not the head and shoulders part, but this descending resistance here with this flat support. So I'll be looking for some profits here. Support again if we make it. Maybe a little before there. If we break there, then look out below. I have to leave this table also.
Activity. Tell us why, because last I checked, the Fed said rates are going to be higher.
Wipe your lens.
Yeah, so a lot of companies know whether or not they're going to be, well off to do or not.
Got like sound editing boards and stuff, and you don't just wipe your lens.
Out there that are getting back into growth mode because even after all these rate hikes and you're seeing the consumer being pretty resilient, they want to get back into growth mode and don't want to remain stagnant, right? When you're projecting, the street's projecting 12% earnings growth next year, a lot of companies are pretty optimistic. But on the other side, again, when you kind of look at the whole overall market participation being spread so thinly, when you look at the equal weight, S&P 500 only being up 1% or so this year, there's a lot of companies hunkering down. So I think what you're going to start to see heading into next year is a lot of those guys that are in growth mode start to acquire those in survival mode as credit is more expensive, refinancing debt's more expensive, and frankly, some bankruptcies and defaults tick up, which is actually bullish for the the merger and acquisition market, which, stock we own that, we think you can take advantage of as well is Lazard, Lazard, Lazard Financial. They help the investment banking process or these M&A process. So there's always ways to make money. It's just kind of thinking outside the box a little differently with unique trends.
All right, so more deal activity potentially on the horizon. We also have had a big month so far for IPOs, starting to see a thawing of the IPO market. I was taking a look. ARM shares are actually up 5% today, so they're hanging in there above their IPO price after really kind of seeing a fall from that initial pop. Klaviyo also a little bit higher than its IPO price, trading around $33.52, but Maple Bear, Instacart trading just below that IPO price. So tell us why you think we'll see an uptick in IPOs, and have the relative success or maybe the performance that you're seeing from these three companies. Do you think that will help or hurt other companies when they look to go public?
It's a big sign. It's a big sign that the IPO market's back, and that Lazard goes back to that being one of the biggest this year and biggest in a couple of years.
There you go. Spike's going down a little bit.
ARM, not Lazard. ARM being one of the biggest in the past couple of years. But the thing is with the IPO market is look at how these deals are getting done. It's a way for us for companies to go to the public markets and raise capital, right? So I don't think it's going to be a rush to go public because they're going to get these extreme
Wow, actually seen a
valuations.
flop.
I think the whole extreme valuation game, maybe outside of ARM, is kind of done. So I think you're going to see an uptick because a lot of companies need capital. A lot of these, smaller, even venture capital type firms, in between the $5 million to $50 million EBITDA range, they're going to want to raise capital. So one way to do that is to go public.
Okay. And playing off what our last guest was just saying too, talking about consumer debt increasing, I was taking a look at your notes, and you say we're in a debt recession right now. So explain what you mean by that, and does that ultimately lead to an economic recession, a typical recession?
I mean, just look at all
Yeah,
that.
thanks, guys, for your likes.
I mean, we keep on going back to that, right?
24
So, I mean, the
on
whole
the day.
behavioral relationship with
That
debt that
bounce on
consumers
SPY.
have is completely different. And we go back to these student loan payments starting back up, the $350 a month on average. You can't tell me the consumers that are already swiping the credit cards are going to be able to finance that through their savings because they don't have any savings. So I think this whole recession talk, we don't even know what a recession is anymore. It's defined differently by everybody. It seems like at this point, we technically already got 2 negative quarters of GDP. It came back pretty hard this year with some growth in the economy. But I think we typically, this whole recession talk, we might not really ever have a true recession ever again, just because access to debt is so accessible. Back in the day when the Federal Reserve was created, when the Federal Reserve was
Thanks,
supposed to be
kitty.
balancing the
You're the man.
dual mandate of jobs and
You're the
rates
kitty.
and everything in the economy, people went to work. They didn't have a credit card. They went to work. They used that money to pay for their lifestyle. Right now,
Imagine
everyone
that.
can borrow another $5 trillion technically. You have $6 trillion out there in revolving credit. So that $5 trillion can go a long way. So the
They
whole
went to
typical
work and made
idea
money
about a recession
and
coming, I
bought
don't know if
things
it's
with
going to
that
happen
money they
unless we
made.
get a full uptick in the labor
And if
market.
they make money,
Wants
they
an
didn't
uptick
buy
in labor
things.
and the unemployment rate.
Okay. I want to talk about what all of this
Inconceivable.
means for the market, and the fact that you have 2 picks for us means that you're still putting money to work, despite the fact that we are in a debt recession, could lead to what we don't even know is a typical recession anymore. But your first pick is VPU, Vanguard Utility ETF. Tell us why you like this one.
Yeah, so this goes along with my whole thinking of, even with rates remaining higher, there's going to be some defaults rising, right? We're in a credit crunch right now. We saw that kind of at the beginning of this year with Silicon Valley Bank and the whole banking system. And then we had unlimited FDIC insurance, and the whole federal government bailed them out. The Fed added another $340 billion to the balance sheet. So I don't think we're out of the woods yet when it comes to defaults. I mean, what's concerning is not necessarily the default rates, because we're very close to when it comes to, car loans, when it comes to even credit card defaults. We're at the same levels that we were right around 2019, 2020. What is
Congratulations,
concerning
you
is the
scared us off.
uptick in the default rate. So what I think will happen is there's going to be this
Love it with the
maybe flight
pop-ups.
to safety type of deal. We already saw that kind of last week with utilities being up 5%. So we think utilities is a good trade, along with the whole thought process that we're probably near the end of the rate hiking cycle, obviously, rather than the beginning. So maybe 1 more rate hike, maybe 2 more, but us being towards the end is going to help utilities. And we think that they sold off enough this year.
Yeah, and I was taking a look. Utilities and energy, the only 2 positive sectors on the S&P for September. Another name you like, Aspen Aerogels. This is the one that's down 40% year to date, actually a little more than that. So you're buying the dip here. Tell us why.
Yeah, so this is a stock to where, you know, the whole electric vehicle trend and the whole push towards EVs and the climate, you know, the push that, you know, the current administration's making, whether or not I like Tesla, whether or not I like to be the true winner in that space, what I would like to bet on is who's actually supplying, who's the arms dealer for the electric vehicles,
Okay,
right?
SPY's
That's
coming
Aston
down.
Martin. Their technology
I
makes
guess I'm gonna start
the
taking some
batteries
profits
more
here.
efficient, makes them last longer. It's something that all these electric
430,
vehicle makers need.
69.
And the stock's down, like you said, 40% this year. I think it's down 85% from the top. And the one thing that got me
In
excited,
case we are
we've
just
kind of
in
been
a
dollar
bullish
cost averaging
wedge,
over the past
which
couple of months on this stock.
kind of looks like.
One thing that we added more money to work, one of the reasons we added more money to work just recently,
Okay,
earlier this
closing one
month,
there.
was there's insider buying. There was insider buying happening pretty heavily by 3 or 4 board members and directors. I like when insiders buy their stock. If they're excited about their stock, I'm excited about their stock, especially in this environment.
All right. Well, we appreciate those 2 picks. Luke Lloyd, Strategic Wealth Partners, thanks so much.
Thank you. Appreciate it.
Still ahead on Schwab Network, lessons
Closing
learned
some
from the
more.
costly cyber attacks that hit MGM and Clorox and the federal rule changes investors should be watching. Stay with us. We'll be back after this quick break.
Okay, I'm gonna put a stop on the rest. I think we could flush through here, but we also could be at the bottom again, or close to it. Almost full to that. Anybody got an ace? Apparently everybody. Alright, let's do it. This guy's got spades. He had nothing. 5 ace. No one had spades. All spades out there. Close another one. I'll jump back in if it breaks the low. Does really no one have a spade? Someone's gonna call it the spade. Just slow playing. Maybe a really low spade. Or queen. Got a pair of 6s. Pair of aces. I'm out of the rest. We're getting down to it, getting down to the end of the wedge. Which way we go? What are these guys racing with? And why is the pot so small? What'd you get there? Pair of kings, huh? I wasn't even slow playing. This guy thought I was bluffing. Thought I was playing pretty aggressive. Crazy day on SPY. I've got it. Ace Ventura. Got there. Wrong black card. Let's see, am I getting back into these puts? Oh wait. Dang, this I wasn't paying attention. The straight, I was gonna say the straight got there. Would have been raising. I'm finally out of buying power. That's crazy. For this final trade, I ran out. Yeah, I finally had a buying power. I did it. I won. I think that means I win, right? I won? I won the money? I won. I won the money. The money is mine.
Companies in cybersecurity to build out their portfolio, which will in turn again lead to more M&A, I believe.
Holy
All
lag.
right, Suresh Vasudevan, really appreciate your expertise in this space. Thanks for shedding light on it.
My pleasure. Thanks for having me.
That was the CEO of Cystic.
I think I did pretty well. I did so much trading today.
Looking at the legal cannabis market and the big week ahead on Capitol Hill that could be the start of a nationwide shift. As we head to break, let's take a look at some of today's winners and losers in the S&P 500.
When there's a range and you can kind of define it and see it, it's like a lot of trading can ensue. Call. All the calls. Come on. I don't have any buying power to go long or short. Wish I'd folded. Yeah, my cash balance is actually negative, I think, because of transaction fees. I'm not sure. That's really strange to have like overtraded successfully. I don't know if I've ever done that. What's up, Jay? What's up, Bubba? There you go. Let's see if we get a break here. We're still stuck. I'm not trading it, but I can tell you what I do. I mean, you can see pretty clearly now. It's defined. The top of this range. The fact that we have a flat support down here, it's a bullish structure, but it does need to break this resistance. And upon doing so, I would be getting calls. There, I'd get calls. Could wait for a little pullback, but yeah. That was a gnarly pop. I'd like to exit. I mean, this could be a big trade. Could have just squandered huge profits. Because we really didn't do much at all today. Look for high of the day. Yeah, it's happening. It's happening. I'm satisfied. Content. Pleased. I don't know, I was getting close. It didn't. Unless if I actually already did a good faith violation trade and I didn't realize. I don't think so. Traded so much on this account. I gotta add this up. I gotta figure out. I can't even tell what I made or lost today on this account. It's always truly crazy. Like Active Trader Pro might be fine, even though it looks like it's designed from like 1997. But just the website, like trading on that, it's outrageous. I have to hit refresh button to get like updated quotes. I gotta move out of Fidelity. It's It's awful. Let's see. Yeah, can I see? Here you go, SPY. I didn't know I was getting closer. I definitely would have slowed down. Give myself buying power for this end of day move. Fine, I'll just win at poker. I have to pay fees? Yeah, I have to pay fees. Hope no one has a straight here. There's a red candle. I mean, actually it's a kind of resistance at that high, but I don't think so. I think it's just a shakeout, which is a pretty good one. Got the straight? Probably. If he doesn't, he's folding. Pair of jacks? Oh my. Because my two pairs lower, 6 and a 5. Pocket pair. That sucks. It's like worst case. I think PP's gonna make a lot of money and grow his channel a lot. That's all I can imagine. I don't think it's gonna have anything to do with the barbecue stock price. $0.5. Oh, that was a joke. I mean, he's coming on after market closes, right? Maybe beer 8.7. Do it. That's 7.9, so yeah, maybe a push up to that. So now you're set up for a little inverse head and shoulders. So you get a break of that channel. See if you get a shoulder on the break again. If they planned a wake to say goodbye baseball. I don't know what that means. Oh, if it rejects this channel again, then that's not good. Yeah, that's not good. But we're getting right down to the end of this wedge, so should have confirmation one way or the other. I fold that?
soon. We don't know the timing.
That's been happening periodically.
It means that these cannabis companies,
all the video will just
it's a multi-billion-dollar industry,
freeze
would
like
no
that.
longer be treated as illegal narcotics traffickers and hit with something called Schedule 280E. 280E is a punitive tax that taxes them like drug traffickers. If that is removed, and it's automatically removed with this rescheduling, it's a huge boost to these companies' bottom line in their revenue without these taxes. Now, that's just one of the pieces, and I know I'm changing gears here because we have safe banking in the works. We have this rescheduling in the works, and supposedly, we've been told, there is something called a Garland memo, much like the Cole memo of the Obama administration, from the Attorney General, that would clear up some of the details about states' rights for adult use cannabis, a number of other things. Another important thing about safe banking is it's twofold. First of all, these dispensaries are largely cash businesses. Some people have ATM machines in there. They can get cash and do a cash transaction. There's been armed robberies. It's a very dangerous business to have these dispensary workers at risk of armed robbery because it's a huge cash business. So we want them to be able to bank. Another level, though, is the corporations themselves. We have publicly listed, usually on a secondary exchange in Canada, multi-billion-dollar in some cases, corporations that can't list on the major exchanges. They can't do banking with major federal banks. Their stocks can't be custodied or traded at a major federal bank, who also in turn own a lot of brokerages. So we have an entire domino effect that we've been waiting on for 3 years now that we think is really, really in motion now, and it could be a real big boon to these stocks in the US.
Okay, so potentially some headwinds lifted. So let's talk about who some of the winners in this space are going to be. I know Advisor Shares has the world's largest cannabis ETF, ticker symbol MSOS. But in terms of individual names that you like that could stand to benefit from all of these developments, what are those?
Well, all you have to do is look at our funds holdings. They're on our website. This is called an actively managed ETF. It doesn't mean we're overly active. It just means we're picking the stocks and how to weight them. The largest holding is called Green Thumb Industries. It's really widely thought as a best-in-breed cannabis company in the U.S. Right behind it is Curaleaf. Curaleaf actually is a little bit bigger. They have a little bit bigger footprint in more states in the United States. They also have some great inroads in Europe, Germany, other places. I mentioned those two companies are U.S. traded companies, OTC, because they're listed on secondary, smaller exchanges in Canada. And it's really important for people to understand the difference between a Canadian operator. People have heard of the names like Canopy and Tilray and Aurora. They're listed on major exchanges in the U.S. because they have to keep all their THC, marijuana business out of the United States. A lot of average investors don't pay attention to the difference. They don't know the difference. They don't have 280E taxes in Canada. They just don't have enough customers in Canada. The real benefit here is U.S. companies, Green Thumb Industries, Curaleaf. Right behind that, we have a company called Verano. We have Trulieve Cannabis. We have Cresco Labs. Look at our funds holdings, and those are the biggest multi-state operators in the United
Nuts
States.
indeed.
And we see a lot of upside with banking, with a rescheduling, and probably a Garland memo to explain the
Thanks,
difference
Guts.
between
Appreciate it,
medical
man.
marijuana states and
The
adult use
ego on
states.
you.
Guts gifting membership, slapping donos. Thanks, Guts. Appreciate generosity. Right to psych you up. Well deserved.
You too, thanks.
You got there? Is that a little chicken? A little tropical drink? Can't see what's going on.
To discuss the short-term rentals
Margarita
market
Monday.
and
Oh
the shift in
snap!
regulations in New York
Yeah, I did
City.
overtrade my.
Airbnb's outlook.
Did overtrade my long term. Whoops. Maybe I'll be okay.
Young lady who is mid-30s.
Thanks, guys. Appreciate the support, man. Thanks for generosity. Thank you up. Congratulations. I'll give you the Happy Crew role on Discord. Might have to DM me to remind me though. Look at Spy just pinballing back and forth in this range now. So excited. Nice. Well done, Guts. Liquor is not good. Liquor trade's never good unless you're short. What were you trading? Dang. Dang. Liquor down 17%. Went from 8% to 17%. This is probably one of the worst performing IPOs I think I've ever seen. Share buyback program announced on 9/8. How's that going for you? Doesn't look like you've started it. Stock has literally tanked since then. Don't know how that's even possible. I don't think they're buying back yet. Liquor House says its buyback program is in effect. Is that on the 8th? That's weird. I don't get to sell off. I have an identity now.
The share price hasn't reacted all that much. We can also kind of point to the overall regulatory environment. And actually, what we have found in our research is the regulatory environment was a lot more stricter and uncertain several years ago. At that time, at the end of last decade, you had many cities, Paris, Sydney, Tokyo, Berlin, applying some restrictive policy. Fast forward to today, Airbnb has gotten through those regulatory periods. And in fact, with Berlin, they overturned essentially a full ban of short-term rentals in 2016 with a law that reversed that in 2018. So you always have to monitor the regulatory environment for a company like Airbnb, but we do think they'll be able to manage through this current period with New York City.
Well, you bring up a good point by talking about some of the international markets that Airbnb isn't a company that just operates here in the United States. So I guess is New York City just a small piece of the pie? What are the key markets that Airbnb is really looking to expand the most in?
Well, you just said it. It's a global company. So, in fact, when you look at any particular city, there's no city that's going to be generating more than a very low single-digit % of their total revenue. I mean, New York is one of, or was in 2022, one of their larger markets. But again, it only constituted 1% of revenue. So, I mean, the great thing about a global travel platform like Airbnb and its peers, Booking Holdings and Expedia, is as there are situations, whether it be regulatory or, perhaps weather-related types of issues in markets or geopolitical issues in markets, people that were planning to travel to that market,
I think we'll probably break to the
they
upside.
still want to travel, so they just
But I don't know which way yet.
travel to other areas.
Based on this.
All right, Dan, just a heads up, we're still having trouble connecting with JR, so this is a panel of one, just in case you were wondering.
But we're getting right down to it. Power Hour is going to give us our confirmed move.
I want to talk to you about price target because I know that JR has a price target through 2024 of 180 for Airbnb. Yours is a little more cautious. I saw you had one of 128. Airbnb is currently trading at 133.69, so below that. But it sounds like maybe you're going to adjust that a bit.
Yeah, so our price target was 120.
Yeah, about that.
Going into the second quarter, it since has increased and currently is 132. So kind of where the stock price is. So that equates to essentially a forward EV to EBITDA multiple of 20 times, which is a commonly used metric in the industry. We think that's reasonable. Our forecast over the next 5 years is for EBITDA growth of around 16%. On average. And so a 20 times multiple, we think, is pretty reasonable for that level of growth. We would, or perhaps it's worth mentioning, this is a name that can be volatile, even right or wrong. It can trade with the technology industry. When tech was hot and IPO market was hot, we saw shares rise well above $200. The multiple we felt was very inflated at that time. It since has kind of come back into a fair value territory for us, which we think makes sense. But yeah, it kind of fluctuates through how people are viewing technology companies. This is a highly profitable company, so this is not a company that necessarily needs the debt markets. It really doesn't. Its free cash flow and balance sheet are quite stout. So it shouldn't really trade with kind of those companies when there is a concern in the marketplace for those unprofitable tech companies, but it can occasionally. So we always have said Airbnb is a great company. When it was trading at $200 per share, we didn't think it was a great stock. Right now, it's kind of getting into an interesting territory for us. If it were to correct related to New York issues, we would, all else equal, view that as an opportunity.
All right, so you'd buy the dip. You have 5 seconds. A company that you'd like better than Airbnb right now.
Well, as a stock,
buy.
Expedia,
Have some
we think
continuation.
EV to EBITDA multiple of 5 times. It still gives you growth. They've redone their platform. I think they're going to harvest
inverse
the
cup
benefits
here.
of that investment.
All right, Dan Wasilek, thanks so much for being our panel of one.
Oh, it's bouncing right on that same level again.
Stay tuned because Market on Close is next on the Schwab
Come
Network.
on, you can break it. Do it. You should feel moved. Happy money crew. Like you up. Happy money crew. Alright, SPY. At least give us VWAP. At least give us this low. Doesn't want to do it. If it holds here, that's really bullish. Go. There you don't go. For all that it's put us through, we need to see a move way through VWAP. We'll see today's low, 425, 428, 64. Had a nice break on our channel there, actually. Oh my. I'm out. I'm out. Too choppy for me. Power hours here. It doesn't hold? Short term? No, just today. There it goes. Dang it. There it goes. That's what I was looking for. Just one little stop loss hunt. There's VWAP. Probably gonna get more on it too. Yep, there it is. There it is. All of the move. It wasn't mine to have. Bro, stay in. Bye-bye. How many accounts did you blow up? No, I did well today. Without even any continuation, really. I mean, you had some moves, but really just very tight range. I'm planning on cutting out early today too, so I can't nurse this one. I think you've got until maybe this, back into the same channel that we've been in for the last 4 hours. Might bounce here. If it breaks here, yeah, you can get that full inverse cup. Have the larger move today. Yeah, that's kind of you. The longer time frame doesn't change a whole lot. It just means that bulls didn't have enough liquidity to pump it up more. I think it's still coming. It just, yeah, not enough strength today to do it. All right, there's the bottom of that channel. I would be taking some profits there. Being that is power hour, we could get a continuation here though. Been waiting for it all day, but if the bulls are still in control, you might not. You might stay in this channel. So with that, I'd be taking more profit.
This is still going to get pretty interesting. Watch yields, watch the U.S. dollar, and every now and then you should probably keep an eye on crude oil as well.
Well, that's kind of where it's, yeah, today we don't have that one missing, so it's not the three horsemen,
Right.
it's the two. You got the dollar and rates. But that's where it's kind of a hard day to describe because, I mean, if you told me bonds are selling off 0.5% again, dollars up 40 bips, I would have said stocks are getting creamed.
Stocks normally would be heavy.
What I will say is energy's leading despite crude being down. Materials, discretionary, those groups are a little bit more kind of cyclical in nature, a little bit more economically sensitive, whereas tech still is actually red despite some of the strength in some of the others. Utilities as well, real estate's red. So there's some interest rate sensitivity in this market perhaps.
Utilities and real estate, that's the easiest thing to connect the dots to on higher yields, right?
Sure.
Remember, utilities carry a lot of debt. Real estate, it's obvious why that might be slow. So those are the easy ones. But financials should recover, right? The other side of that should be financials.
To me, that is still a hang up here. This market is still worried that banks are going to be in trouble with higher rates, but it's such a different yield curve than what caused the problems for the regionals. That's where I sense the market still hasn't, I don't know, I mean, look, it seems crazy to say the market hasn't figured it out, and I have, or we have, or whatever, but like, it doesn't really make much sense.
Every now and then there's some part of the economy, some part of a trading day that I just call a head scratcher.
Yeah, sure.
It's a head scratcher. That doesn't mean it won't snap back tomorrow and one might find religion on this subject, but at least right now,
On amazing
banks
vacations.
should be doing better than they are.
All right, speaking of religion,
Ow.
let's talk some Apple, Renita. It's a small move today, but it was kind of like an early back.
Yeah, that can work if you only take 2 trades.
This morning, Apple was actually positive, and the reports
great.
coming in about the demand seem to be
Keeps you from over trading.
for the new iPhone.
Oh yeah, we get
I
an
mean,
early
I wouldn't trade
look
50% of my account, but
into the demand
unless it's, yeah, a small
structure
account.
of, you know, what's driving iPhone
your
15 sales.
buying power.
So Counterpoint Research, they said that demand for the basic iPhone 15 is so high that it's almost double. It's taking almost double the amount of time than it did last year for its predecessor.
Yeah, spy flush through there.
About 10 days to deliver the iPhone 15
Here we
basic
go.
model, whereas last year its predecessor took about 6 days to deliver.
In this case, that's a good thing.
That is a good thing. So it means that people want this thing so badly that, yeah, they're willing to wait a little bit for it, and they're willing to pay for it too.
Oh man, those
That
doubled up.
top-tier iPhone 15
Those
Pro
puts.
Max, it increased order waiting times to a record.
Dang, they literally
And
doubled.
analysts
That's crazy.
say that this is because of the significant upgrades that the phones made, which is very different from when we saw those incremental iPhone upgrades over the past few years. But it's some interesting parts of this story too. It also saw extra long delivery times in China for the Pro Max. It's still the most coveted iPhone in China right now, but those have not yet translated into higher resale prices. And they say that scalper prices for China or in China, they're actually moderate. They're asking for moderate premiums right now. So it's not that much, but the reason why they say that could be happening is because they could also be showing that demand is partially driven by trade-ins. So is the demand really driven by people buying this phone, cash in, paying full price for it, or maybe they get an installment agreement, or is it being driven by people who are trading in their phones?
Yeah, lessens the blow a little
Well,
bit of
what happens when the bottom of the channel holds support?
for your old phone.
Yeah.
I mean, I guess it's kind of like
Bounces.
what we should expect these cycles to be like now, though. I mean, because they have use for the old devices, and everybody kind of wins.
Yeah, everybody kind of wins. And what they want is just loyal Apple customers so that they can use their services. Remember, that's still one of the most fastest growing parts of this company anyway, the actual Apple services that are on the iPhone and on the other devices. And then you have the entire ecosystem of Apple. They're concerned about keeping people in the ecosystem.
Yeah, all right. So far, nothing bad. Wait time's a good thing because there's so much demand. Analysts putting even higher price targets on, keeping their buy ratings. So at least it's steady as it goes, no shocks. Speaking of China, real quick, Kevin, one other thing that could have thrown us today was the overnight news that China's commercial real estate Evergrande situation is still up in the air and maybe worsening.
And maybe worsening. Yeah, you know, our markets hung in there overnight, even though the China markets were down. If you look at the Hang Seng, it was down a pretty big number last night. It sounds like, now I'm not an expert on China, Oliver, but it sounds like Evergrande is in trouble because they're not able to restructure their debt because they've got some government, investigations into what they're doing. It looks like the ex-CEO and the CFO were detained. So
If you show reaction party, no.
Where there's smoke, there's fire, and there's a lot of smoke.
Respect the level them busted,
I
huh?
think it looks like, as little as I know about what's going on here right now, they're having trouble restructuring their debt, and that could lead to a bigger problem.
I'm actually going to take off here pretty soon.
Thanks for the heads up. Rough day for China stocks as a result, but we were able to shrug it off for the most part. We got one index still higher, Russell, but we'll see how the others go.
Good, yeah. That's why you just scale out, take some profits, and hang out. Put a stop loss, break even on the rest.
Real estate. That's one of the subjects in focus. At Colliers, Aaron Jodka joins us, Director of Research, covering U.S. capital markets. Aaron, welcome to the show this afternoon. When you think about commercial real estate, do you have to think about China at all? Is there any systemic risk of this big company that folks are worried might just go belly up?
Well, hi, Oliver. Thanks for having me back. It's an interesting question. Right now, the interest rate story is really going to be the factor that the markets are looking at here domestically as well as internationally. The Evergrande situation, as just mentioned, they have some internal challenges with leadership, but the debt structure is really the challenge that we're facing in real estate today, where there are a number of properties that have debt maturing in the near term over the next few years that need to be worked out one way or another.
Okay. So at this point, the U.S. action still largely a macro, a rate-driven one. Where is the pain point? Where
Beyond
is
new lows there.
For commercial real estate here in terms of what they can tolerate for interest rates, Aaron?
So it's a recalibration.
I'd see bouncing a little bit. That's
high
good.
since 2007, and there's really an entire generation of commercial real estate investors who've benefited from stimulus. They've benefited from low interest rate environments and
Little inverse head and shoulders on the SPY at support.
Tremendous value growth.
If that plays
value
out.
growth has allowed them to refinance their loans, continue to take money out of those assets, and really see amazing returns. Well, with a higher borrowing cost and potentially structurally higher for the near term, if you believe the Fed's higher for longer and potentially higher neutral rate, that means that we need to really
0 days
figure out
towards the end of
which
the day are
asset
so fun.
classes can outperform,
They
which
move so
buildings
crazy.
will outperform. And it's
I
not
missed
as
that.
much about I just invested in real estate.
By the end of the day,
It's
last
this
couple
building,
trading
this
days, I've
location, this
been stuck
submarket,
on my
this
long terms. I've been
market,
having to trade
that will really start to become
tomorrow's.
What right now, if you had to kind of
There's your bounce on
figure
SPY.
out
See what happens at VWAP.
riskiest parts, the kind of low-hanging fruit of the analysis, I mean, what's like obviously in trouble? Because if I drive around a lot of major cities in America, there's still a lot of vacancies.
Super Celsius structure reversal trading.
It's got to be an issue. But then I feel like everybody sees
4,200,
that issue, too.
200,000.
It's one of those things in markets where, like,
Not without risk management.
all right, drive by a building.
Unless you want to do it the 4,200 to 100,000 to 0 challenge.
Chicago that we're in is missing a lot of tenants. The restaurant downstairs shut down. Anybody who's worked here for more than the COVID period knows that there's probably some issues going on. So, but we also see it in front of us. So how do we navigate that as investors?
Yeah, so you're right. It's not a surprise. We can see it with our own eyes as we witness the situations playing out. The biggest risk are properties that have high vacancy because they cannot
Buy back up to VWAP.
of their current debt structure, right? If their loans no longer perform and their loan is not paying and covering, well, that's going to be a real challenge. Now, if you have a well-occupied building, regardless of asset class,
I love
banks are willing
VWAP.
to work with you.
Still
Your
in this
lenders are willing
channel.
to work with you. They'll extend a loan as long as they're meeting the different debt coverage ratios and LTVs, etc. Oftentimes, they want a little bit.
If it breaks the upside of the channel, then you're very bullish at the end of the day.
It's a situation where.
But yeah, this
real
already is
estate
bullish.
still
The fact that it held that support.
The assets
Basically a
that are
big bull
struggling,
flag.
and typically where you see those headlines, they've gone from a very well occupied situation to one that they're highly vacant.
Very controlled selling.
And a non-performing loan is a real challenge.
Is there like a level of vacancy that's a threshold? I mean, like, what are we talking here? Like, where does it really start to hurt if you kind of rank, if you go through the portfolio and you
43K to 0, you won that one? Well done.
Like, where do you draw the line? I'm almost thinking like, if you're like a ratings agency almost, like where does it, where does that vacancy rate start to overlap among poor performing properties?
When you start to get to 70, 75% occupancy, you start to feel some real challenges. When you're in the 60, 65% occupancy, that's a real problem because your loan is no longer performing. So that's really where we start to look at those challenges. And some of the deals that we've seen that have gone off, they're 10% occupied, 20% occupied. In some cases, they're empty. So in that case, there is no income. And you'd mentioned in your previous segment that there's sort of a chase for yield as well as a competition for yield. And real estate's been a major benefactor of that chase and seeking of yield over the last few years. Well,
How bullish that support being held is.
Cash flow. It's going to come down to occupancy.
Bulls definitely own this day.
Really,
They just had to build liquidity all day.
And
they maybe still need to build more. We'll see if they can break it out. So far, you're just right back up to the top of the channel.
What does that calendar look like, Aaron? Where does that volume get dispersed?
So
I wasn't sure how long that was going to last.
Situation here. So in 2020,
I didn't want to take the long. That would have been a nice long trade.
In loans that
I got to take off.
Now some of that has been extended. They've worked some things out, and there's been a balance. So that's going to kind of shift and spread out. But through 2027, we're tracking about $2.6 trillion in loan maturities, about half of which are on bank balance sheets.
Getting honorable doctorate.
The banks that
Congratulations.
are on the other end, do we still see risks on that side? With the regional turmoil earlier this year, a lot of folks connected the dots to commercial real estate. Of course, a few have already gone bust. There was a lot of M&A that happened already. Maybe more poised to absorb losses for these banks that got absorbed by bigger financial institutions.
Appreciate it.
Where does that come into?
Yeah, it will be something that we need to continue to watch.
That's what this looked like.
Today, you're not
This very controlled drop.
Unless your debt
This
is
rip.
maturing, where we
Look
had
at
a
that
lot
volume.
of loan churn in the years prior, where interest rates continue to fall. I was able to take out capital out of the property. We saw a lot of that, which allowed the bank to then lend again. Well, we're not facing that same situation
But
today.
without a
I'm
breakout
now
to the upside,
effectively opting
nothing.
to refinance my loan. Similar to owning a home. If you locked in a 3% 30-year mortgage rate, you're trying not to recycle that loan into a 7% plus loan today, unless you have to. So we're in this situation where banks are trying to figure things out. They're working with their their borrowers, and ultimately trying to bridge this gap, figuring out where interest rates will ultimately go. But it doesn't appear that we're going to be down to a 0%, 1% interest rate environment anytime soon, unless there's a shock.
All whole day, liquidity shakeout day.
In which case,
yeah.
That's not good for real estate fundamentals.
Liquidity building day. Shaking out. Stops. Traders.
So there's got to be some saving grace to an extent there.
Being added.
Inflation would be obviously the worst if the economy
by the traders.
Bombs, but then inflation stays high. That's like the real estate nightmare. Lastly, Aaron, is there a municipal implication here for cities and states that are dealing with those high vacancy rates?
It's bullish, though. I mean,
it could be. In certain cases, you'll see some repricing of sort of the
still have this inverse head and shoulders
the appraisal values
on the bottom.
Real estate assets.
It's just been fighting with that range.
But again, those are those struggling assets today that have low occupancy that are worth less.
I think we're still getting our bounce.
They're poor occupancy.
The longer term.
It will not be systemic in the sense that every building will be
might not come out today though.
Same level. It doesn't make sense.
320.
Again, if you have a well-occupied building, you should be in good shape. And there's also a record amount of capital sitting on the sidelines looking to invest in real estate. So I believe that's going to help set a floor for us, where you can't just have a complete free fall because there's $200 billion, $270 billion of capital sitting on the sidelines charting North American real estate assets. So that to me is our saving grace we didn't have in the global financial crisis. We didn't have in the savings and loan crisis era. So that to me is our sort of best saving grace in the market today.
Yeah, things get worse. Okay, let's say those maturities come due and there's some more pain in the sector. As long as the economy remains on decent footing, there will probably be buyers of that space. We're creative people. We can figure out stuff to do with 100%. The space, even if it's not an office. A really interesting conversation. Love the details on a subject a lot of people speak very broadly about, so that's helpful to us. Aaron, thanks a lot. And of course,
thank you.
Good insight coming from Colliers, which is the fourth biggest global real estate company. CIGI, by the way, which is still up more than 10% on the year. So far from panic in the market in 2023 around the commercial real estate situation. When we come back, let's get into the aerospace and defense world, look at the ETF. We've talked about a few times from the Gabelli team, revisiting a few of the stories. And it's been quite volatile, actually. A lot of folks view the defense trades as defensive stocks, but a few of them have not worked.
For your bullish breakout here. All day building liquidity for it. All day. Hey, muster. Thanks, Psyche. I appreciate it, man. You too, buddy. Hub's PhD? Shortly. I'm not exactly sure yet. This is the same sort of algo we got on Friday, just on a smaller scale. Remember that rip? And this was crazy. And that huge tip. Yeah, Friday was good to me. Last week just was filled with lots of good trading days. Even today, like, yeah, it's kind of liquidity building and stuck in a chop, but also a pretty defined trend in range, so that makes it pretty easy. I mean, I guess I shouldn't say easy, but it's just, it's not like a range that keeps breaking. Yeah, look at that. Respecting the top of that channel. Seems pretty well defined.
A lot of competition, and are there difficulties in getting the parts to make some of these big ticket vehicles and aircraft? Because it feels like a lot of these companies that we kind of assume as being stalwarts of the industry have had a tough year.
Yeah, well, thanks for that, Oliver. You know, we just hosted our 29th annual Aerospace and Defense Symposium earlier this month and had 15 incredible
Could have
companies
done.
in the aerospace and defense industry.
That would have been a 200% move right there.
The dynamics going
on dailies.
What's going on in the industry?
At least.
And, you know, it's.
You could probably get another 200% coming back down.
There are some challenges.
No promises though. Could just chop around.
Long-term, the secular tailwinds
Got 30
are,
minutes
you know,
left.
pretty much intact, and you know, companies like Boeing and Lockheed.
I mean, because the trade,
are going to have these long.
well, right here, from right here to here was
production.
100%. Know what I was saying?
And then
Yeah.
The aftermarket, the servicing side of it as well.
The one I
for these,
got shaken out of.
You know, these wonderful products they make going into.
Should have held
you know,
for sure.
A market
But yeah,
that's
this
got,
move up here
a lot of growth
with less
and,
time, end up more violent move.
The emerging economies
And a bigger move.
are coming up, and they want to travel more. And
The 200% right there.
You're going to see a lot of these countries buying a lot of
Cookie.
Boeing and Airbus aircraft, and our NATO partners as well as the U.S. We're going to be buying a lot of F-35s from Lockheed Martin. But you know, in the near term, there have been some missteps with production, some hiccups on quality with some of the airframes for the 737 Max, and then on the Lockheed side, just some they're putting a new software package into the aircraft and having some sort of last mile integration of this software, which is going to be a great system when it comes out. So some of the deliveries are going to get delayed. So that's the near term, but I think over the long term, we're gonna have a great industry going forward.
To point out a few here, you mentioned a few. Boeing, so obviously the commercial and the defense side, it seems like the commercial side's got a little bit of a better macro backdrop right now, arguably. I guess people are still traveling. There's still a demand for the 737s and the 787s, but Boeing went from $243 to sub $200. It was up 22% on the year, just like a month and a half ago. Is this truly representative of their ability to meet demand, or should that demand just sort of be an eventuality? Like, why does the market care so much about the immediacy of some of these deliveries?
I went down a little bit.
Oliver. I think, again,
got 30 minutes to close.
There are some issues with deliveries, getting these jets out there, and some of the production, as well as supply chain. Labor is always tight, but long term, they've got a really good problem to have. They've got, virtually infinite, 10+ year demand, which, by the way, only increased during the pandemic, which was, by far the largest shot to commercial aviation in the history, in modern times. Those orders essentially didn't go off, if not actually grow. So I think that they're always going to be, when you're in an industry that has such a long cycle as the aerospace, you're going to have near-term dynamics that are going to cause some air pockets, and Boeing is experiencing those right now. But on the long term, you've got a 5,000 plane backlog. You've got a defense industry that NATO is looking to increase its GDP percent spending at 2%. If that were the case, it's $80 billion of additional annual spending on defense by NATO countries, and that's not even to add into NATO non-member allies, i.e. the Asian Pacific countries and Australia, not Australia, but in other countries in Asia Pacific. if you would add actually a bunch of the NATO allies that are members, it's another $80 billion there if they were to go to 2% GDP. So there's a lot of demand, and the U.S. is, the U.S. and the U.S. defense industry is by far the biggest operator there of the $2 trillion global defense industry.
Coming down a little bit.
800 billion.
See what happens at VWAP.
And most of them are, U.S. defense contractors. So I think there's a lot of long-term demand on both sides of it for the industry.
I guess the only question
Back to
left
VWAP.
is who do you double down on the most?
Dang, I wish I had buying power, man. Same thing with Friday. The last hour, there was just huge moves.
You got Honeywell,
Very clear moves.
11%. RTX down 30% on the year. Well, even Lockheed now down 14. It seems like Textron really is the only one that's like double digits up. So do you just pile it all in there, or are there any names that
And take
jump
profits
out
here
you
on your
really
puts.
wanna,
Some profits.
Scoop up shares of?
Yeah, so we like all of those names. Actually, Boeing's in our top 5, Lockheed's in our top 10. We own Raytheon. Listen, the GTF program over the long term, over the life of that engine,
Almost always
is
taking
gonna
profits
have,
at VWAP. Some sort of
you're gonna
profit
have-
taking.
You're gonna have a lot of engine sales, and then
Especially end of day once it close.
of that engine, it's going to go
On that
for
safe
many years, and the
line.
service component's obviously a higher margin business. So I'd be very, I'm very positive on Raytheon. Honeywell, they've got great systems in aerospace and defense as well as other industries, and they're essentially a top player in a top operator in four different industries. So I like all of those. We own Textron, the FLRAA program. They're going to build potentially up to 4,000 of these. Essentially replacements for the Army's Black Hawk helicopter, and then including international sales potentially. So you're going to see a lot of good signs coming out of this industry on companies like Textron and Boeing and Lockheed and Raytheon and Honeywell, and we've got a list of others that are in our GCAD, Gabelli Global Commercial Aerospace and Defense Active ETF. So we're definitely a bull here.
All right. Textron, the big winner.
Bounce on VWAP.
Thanks, Tony. Appreciate the conversation.
Thanks, Oliver, for having me.
Absolutely. All right. Looking at the case for a comeback and some of the defense stocks which have been beaten up. Textron, TXT, the big winner there. Everything else pretty much lower on the year. Tony Bancroft from the Gabelli Fund.
AMC.
When we come back, let's trade some
Hold.
options.
Nah, it didn't hold above that resistance.
Tom's got a bold trade.
It's alright. Try again tomorrow.
Pinterest, not so much.
Probably not. Probably bounce back off the bottom. I don't know. We'll see.
We'll be right back.
Pretty straightforward wedge there on AMC also. Alright, bulls are going to try it again. Break out this late in the day for 10 minutes of Fugazi. Perhaps. It's not. CGC up almost 10. Head and shoulders on CGC. We've got Wish breaking out here into the close. No news on Wish. Might be worth a trade. boy. GameStop moving up a little bit. Up against that resistance? Not really, actually. What a good start to the week. Nice. Nice, Jay. Good to hear. Breakout coming. You bullish now, Bubba? Just here for the program. Barbecue doing? Barbecue down 23% at 8 cents. My deposit failed on Moo, so maybe that's a sign I shouldn't waste any more money on barbecue. That said, I did just see how much I lost on it on one of my accounts. Kind of stung. Makes me want to put in another 1,000 and pull the handle on that slot machine. Billing cash starts tomorrow. All right, man. Why it failed. At a pretty good price now, that barbecue.
Down on what looks like it would be a support level, but hard to know because they already broke through the $400 level, which was pretty well established as technical support. This is now kind of in the middle of the gap from the May liftoff where a bunch of companies started rallying. So, all right, it doesn't really show up in the line chart, but candle maybe. All right, let's look at NEO, your other bullish trade here. Stocks down. Rough day for Chinese stocks. Rough month and a half for NEO, though.
Yeah, I mean,
shocking reversal.
It's down about 14% this year. You know, it's not a high-priced stock. You see a lot of speculative buying on calls.
Hey, it was almost at 17 bucks.
Yeah, it was
a month ago.
Trading above 15 in August. Yeah, at the beginning of August, below $8 earlier on in the session. And this is all based on the report that came out early. And this was out of Bloomberg that said that they approached investors from the Middle East to consider raising about $3 billion amid mounting losses, according to people familiar with Bloomberg. So it's maybe not corroborated that this actually happened. But then the company actually came out and said they were made aware that certain media outlets were speculating that the company is considering raising capital from investors. And they came out, and I'll read the quote here. The company is committed to maintaining transparent and timely communication with the public market. Currently, no reportable capital raising activity. Little bit suspect there because we've seen their sales growth start to plummet. Competitive pressures over there. BYD is blowing everybody's doors off the car in there. And then you've got Tesla raising prices kind of based on what's going on. RBC just actually raised estimates on deliveries for Tesla in that space. But NIO's been under pressure, down about 14% this year, but they came in and buying short-term calls in there too. 8.5 strike calls. Traders were buying over 7,000 of those earlier in the session. Average debit of only 20 cents. Really cheap stock. Really low option premium at this point. So that break even of 870 over the next 4 days. That's only about 4% above the current share price in there.
So I guess you kind of answered the question I was going to ask about the premium in there, because if I were to be bullish NIO, I might favor selling the put.
Top of the channel here.
52-week lows.
But you're not getting any.
Oh, might be breaking.
Yeah, especially on a 4-day trade like
NIO?
this. Yeah, on a 4-day.
Oh, 4 days.
Breaking.
Yeah, that's
bullish.
the thing. Once you start shortening up that duration, option premium goes down. But then you got an $8 stock. That means there's usually not quite a lot of option.
Here we go.
Option, volatility.
432.
Expand those option prices.
Eye of the day. First, take
Right.
profits.
All right, last one you got. Your bear trade is in Pinterest. Crazy couple weeks for the stock.
It is sketchy this late in the day, though.
Faded. I mean, what's with all the excitement over Pinterest right now?
Well, they had their analyst day, investor presentation day on the 19th of this month.
That's why they rallied.
Yep, management tone was pretty positive, balanced, optimistic long-term, near-term macro and product headwinds, but longer-term, they're going to be offsetting some of those near-term headwinds. Citi upgraded the stock right after this to 36 from 30, said incrementally confident that engagement can continue to ramp. Advertising innovation and its full funnel approach can deliver more monetization trends for this name. But that being said, the stock's only up about 8% so far this year. And think about it, Oliver. We've talked about on Fast Market today the consumer. Consumers picking and choosing what they want to buy. And now you've got crude oil at $90 a barrel. You've got rising interest rate environment. The consumer, this might be one of the weakest growth quarters, the historically strong fourth quarter for the consumer that we're going to see in a while. Just there's too many inflationary pressures out there. But that being said, somebody I think going against the grain here, what they saw out of the investor day by buying some puts. They went out to the October 13th weekly series in here, so only about 18 days till expiration.
Okay.
And they bought some 25.5 strike puts in that cycle. Over 7,000
Yeah.
were bought up.
Kind of a little pullback there. See if it's just retesting the breakout.
Even just below 25 over the next
You
18
can
days.
take profits at the highs. This high, this high.
In there. Somebody betting that we're
On your way up.
the next 2.5 weeks. We're not
Given it
gonna
is the
see
end of the
any
day, this
gains.
is where
We're
it's
gonna see some
sketchy.
losses in here, and the stock's sitting right at that 50-day moving average. That breaks down, Oliver. We've seen that repeatedly from other names in the retail space. They break down some through some.
But yeah, I do
key
like it.
support levels.
It looks good.
And there's not much support down below those, but this trader's betting on some bearish activity in here.
Yeah, thin ice, Pinterest, crazy volatile stock, still up in the last year, but it really tests your appetite as an investor if you're long in there. So this trader betting against it for a little bit, of that action in the short term. All right, thanks, Tom. Interesting trades. Let's talk some commodities when we get back. Let's get an update on AI in the music business, how that's going to work for Spotify. Be right back. Markets firming up.
What? Getting failed. Oh. Shoot. Getting an order error on Mumu. Order error. Huh. Weird.
Carefully to see if we get any more follow through. The other thing with crude oil is we're all aware that the SPR is at its 40-year low, that we sold a bunch of crude oil, 180 million barrels.
Everybody knows that.
$95 up on the highs.
GME breaking out a little bit.
Those barrels were never covered.
2.5%.
And the question
Still below
is,
its resistance.
what happens when we get to 95? Do they pull the trigger? Do they turn a $30 winner?
High above the breakout.
So I think the market's going to probably
Above the channel.
on $95 coming up here for the next couple days. That's what I would watch.
All right. When you talk about China and the implications for commodities, is copper the markets like more direct China proxy? Because copper's getting hurt.
Yeah, it's pretty much, if you need to sell, if you want to get short China, or you want to worry about China, slowing down, sell copper. And with the news came out this morning with Evergrande missing their bond payment, that put pressure on it. And if you look at where copper is, it's been trending lower. Back at the heights, we got to 5 cents. It had a pretty big correction down to sub 320. And we're at a very, very key point. We're in this wedge. There's a trend line we're messing with. So then you've got, technicals at work. So you've got, questionable fundamentals. If China's really slowing down, you've got a breakout below support and a trend line. If people want to bet against
at 3
China,
Celsius.
the easiest way to do it is that
Don't be so amped, you'll overtrade.
on copper. So I think 350.
Good level of motion at 7
area, that's going to be
all the
huge.
time.
It's big headlines. If we take that out, I would watch that carefully. Right around 365 right now.
Good motion's out of it.
That. And I think the news this
Be
morning.
stoked to watch the market and sit on your
Evergrande
hands.
misses, bond payment. That scared people, because now what's China going to do? They just did basically, QE, a huge aggressive move to inflate their
That
economy.
false
And if
break
that
off the
didn't
upside.
work, people are going to wonder what's the next shoe to drop. So I would watch that carefully.
Yeah, so when you fire a bazooka, you better hope it hits. Hey, Chris, real fast, in your framework, where does gold sit right now? Any interest, or is it just going to be inverse whatever yields do?
The dollar's at a 6-month high, and gold is hanging in there, which I think is impressive.
Yeah, me too.
It still comes down to the triple top, 2072. Wake me up when we get above 2072. Triple tops supposedly never hold, but 2072 is, that's the big level. And, I'm not making it up. Just go look at the chart. Very, very technical. We've been in the $450 trading range for 3 years. Support down at 1615 and resistance up there at that 2072 level. So, you can't get to $5,000 till you get through 2072.
All right, yeah, true. All right, thanks for the update on what you're looking at. Appreciate it, Chris.
Thanks.
All right, let's talk some AI. Jenny Horn hosts the Next Gen with the update on how Spotify is going to use technology. And one of the few days there's an AI headline on a stock, and the stock's not up, Jenny.
It is not up, and I would say
Jenny.
this is a very interesting way that it could benefit Spotify, but I'd say it's a little bit concerning if you're one of their creators for podcasts specifically. But they did announce this new AI-powered language feature that can translate podcasts into different languages using the host's own voice, which is very cool. But the company did say this feature does rely on OpenAI's voice generation technology. This technology can create these real synthetic voices from just a few seconds of speech. Now, Spotify said this will help make podcast listening experiences more authentic and natural by maintaining
And they're on a high.
podcasters' distinctive speech characteristics. Shares of Spotify, though, like you said, not seeing a
High up
lift on
above
this
there
year. So the
again.
company has worked with several very
Wait for that 10 minutes Fugazi.
podcasters, saying that these episodes
Coming up
were
in 10
initially
seconds.
translated into Spanish, French, and German. They'll be available both to free users as well as paid subscribers in the coming weeks. And as we know from some of these translations, it's not always necessarily super great quality, but this is ensuring that it would actually be pretty much on par quality with the language it was originally recorded in. But here's the concern, I'd say, to me, as we've seen some of these different programs, even outside of Spotify, where an artist has been basically their voice has been then transferred into any sort of song that the creator would like. So you're taking an artist's voice, you're translating it into a different, basically mode of speech. That's a little bit concerning because all of a sudden the rights,
That's awesome. I want to do that.
copyrights to what is being produced, I'd say you lose a little bit of the authenticity if you could just take an artist's voice, make something entirely different. This is somewhat of a controlled manner in which they're doing so, but I also say it opens up the door to say taking a famous
Jay, thanks for the support, buddy.
create a whole new podcast.
Bye,
So it's
testing
like,
that.
where's the
That high from earlier.
This to me is where media in terms of consumption.
Choppy trade if you're in it.
we're still
There it
figuring
is. There's
things
your
out.
break.
It's concerning to me. You could basically take
There it is. Breaking the next high up there.
had him sing something entirely
They need the
different. So
Fugazi.
it almost makes you say,
Sketch.
then you could make the weekend singing anything. I mean, it just opens a very, very scary door for a name like Spotify to have to control a lot of the content and what's being made by AI.
Yeah, they're going to have their work cut out for them. In the meantime, I'm trying to figure out why all the lyrics disappeared on a bunch of the music I listen to. I don't know how. Maybe I'm not paying enough or something. I don't know what's up with that. I used to have the lyrics on every song, and now it's never there.
Do you need the lyrics? I've never even noticed that.
Well, yeah, because I like to sing, okay? So I need the lyrics there. I got to practice my karaoke.
Time to learn the songs, I guess.
Do you need the lyrics?
All right, thanks, Jenny. All right, when we come back, get our Schwab team
I
here to
need
talk
them.
about the week ahead. Stick around.
Well, I ended up being here much longer than I thought. Guess I could review some trades here. Morning trades on the trading account. Not my brightest, but there's some gems in there, I think. Afternoon, I definitely refined it. Let's see. 9:30. Yeah, got in super early for one, which was bad, but I was bullish. Saw the inverse head and shoulders. 9:36 on this green candle. Got one call. Sold it at 9:48. Right up there at this candle. Opened up another call at 10:03, 10:04, and 10:06. Bought the calls. 10:03 on this dip. 10:04. 10:06. Yeah, I was pretty aggressive on this being a dip in an uptrend for some reason. So that wasn't very smart. When it even looks like a head and shoulder there. Yeah. Close those at 10:11 and 10:13. So bounce off of VWAP. Close the first one. Close the next one back up here. I think I made out somewhat okay. Had one more. Oh, I added to it. I still had one more. Added at 10. Yeah, it's still very bullish. Added at 10:16. Yeah, I think I had a little bullish bias this morning. A little too much reflected in these trades. Added 2 at 10:16 and 1 at 10:18. So yeah, added there. Added on that red candle. I don't even. What was I? Anyways, and then closed out of all of them at 10:19 on that red candle. Everything failed. Then 10:25, 10:28, I opened up puts. So right here, that break of VWAP, 10:28, not a great entry for puts. It's just from the channels we're just figuring them out. I thought an inverse cup was coming. This was not the case. Today was not a continuation day. No real big patterns formed. Closed out. Oh, I had 4 puts. Closed out of all of them at 10:34. Wow, never mind. These were bad trades. Stop back out at VWAP. Yeah, that's right. I was down this morning pretty good. Yep, I remember now. Bad trades in the morning. Till I had conviction and I held 2 puts at 1044. Then I started realizing, okay, I'm whipsawing. I have to get ahead of the rhythm. So basically inversing yourself for a bit. 1044, bought 2 puts. And then sold them at 1045. Small profit. Small loss. Another bad trade. Flip to calls. Wow, I traded awful this morning. Never mind. I can't believe today was such a green day. Flip to calls at 1045. Or no, wait. Yeah, flip to calls at 1045. Okay, this was the conviction trade. Once I realized what was going on. I saw these lower lows. And it was setting up a bull flag, basically. We didn't complete the inverse cup, so that's not a win for the Bears. Had a bounce, had an inverse head and shoulders here too, as you can see. And yeah, I'm just waiting for a break of this top channel. There's other drawings I had here earlier that I erased, but yeah, there's other reason. 1045, 2 calls, 1045, 3 calls. That's right here. Had 3 calls. Average into it at 1051. Got 1 more here. Breaking VWAP. And then we took the ride down. I'm like, oh crap. I realize we're still in this channel. 1051. Bottom of that candle. Got another call. 1109. Got my last call. Right there. That's when I finally had confirmation. I was just front running really early here. Here, 1109. 1 more call. And those are what turned me from negative 250 to positive 100. If I exited better, could have been more, but on this account, I was totally happy with that. So fully in calls by this VWAP, and then it broke. I couldn't average anymore. My buying power was all down. Otherwise, I would have added more on this breakup channel. Clearly, that's been in there all day. Sold at 1117. Sold 1. Right there on that green candle. 1125. Sold 1. 1149. Sold 1. 1234. I sold 1. I was very bullish. I was expecting this to keep going. So that's why I was slowly scaling out. And then actually sold the last one there at 1234. So I liked my exits, had nice exits. And I was out of buying power, but I was green 7% on that account. Now the other account, that's where it got wild. Look at that break. Yep. High of the day. Yeah, new high of the day there on SPY. All from this channel break, but then a big stop hunt before another rip. I don't even know if I'm gonna go through all the trades in the other account. A lot. Percentage wise, not up a lot because it's a much bigger account. But dollar wise, up 3 times. 3 times a small account. Let's see. $11.42. When we started playing with the roller coaster. Oh, see, I'd actually added in already. Okay. So I liked the trade I was in, so I started adding with this one. 11.42 right here. Must have been a channel break or something, or maybe I was buying on the support actually on this. I remember. Bought 1 call, and then bought 3 at 11.40. Oh, bought 4 there. 11.43, bought 5. So on this candle, then I had 9. Yeah, I was going pretty heavy. These are tomorrow's too. And then closed 1 at 11.45. So right here. I had 9, closed one at 1146. 1147, so I was out of 3 by then. And I put a stop probably on the rest for break even. I would hope so, at least something like that. 1149, closed another one. Uh, 1152. Right there. 1154. This is when I started to notice it kind of rolling over. So we had that steeper uptrend in the morning, those resistances, and then they didn't keep meeting. So then we started making these less aggressive highs once we got here, and that's what made me a little more bearish, like a reversal was coming. And I wasn't even sure we were going to retest it again, so I was starting to get out here. 1158. That was another one. And yeah, I think I put a stop on the rest. At this point, oh no, I got more. Was that all of them? No, I think I averaged back into it. So bought 5 more at 1207. Yeah, once it broke, I had more lines here again, if you guys are watching. Bought 5 more here, so averaged back in. I think I had 9 again. Then sold at 1214. Right here. Sold 1. 1215 sold 1. And 1218 sold 1 right there. 1228 sold 1. Sold 1 at 1230. And then I think I put a stop on the rest for calls. Just in case. And I started getting puts. 1237. So we have this head and shoulders up here. We have a clear rejection on the top of that channel. 1230. So I was late on these puts. But anyways. Bought 3 puts there. 1237. Bought 3 more at 1245. I was hoping for more of a bounce, but it didn't give it to us, so got more there. Another little head and shoulders. And we just broken out of this channel. I can't remember what that's from, but yeah. And then down we go. 1251, sold my first one. That big red candle. 1253, sold 1. 1254, sold 1. 1256, sold 1. 1256. And then I stopped. Okay, so I put a stop in the rest of the puts, which was 2. So stopped out of the rest at break even. And then I bought calls 108. I was playing the roller coaster. So here's, I was way late on that. Waited for confirmation. Oh, I remember actually. Yeah, I had a hard time. It just took me forever. Bought calls there. Got 5. And then right here at 108. Sold 1 at 113. Ended up just kind of scalping these because I had a late entry. 114. Sold another one. And then stopped out of the rest for break even. Somewhere at 116. Right there. And I bought puts 127. And waiting for a lot of confirmation, I guess. Not really realizing the range we're in. Bought 6 puts right here. Sold 1 at 134. Right here. Another one at 144. Another one at 144. And then I think it's the last one at 148. Yep. Or no. That was another one. And 152, I sold the rest of the puts. Here. So I sold 6 up here. Right here. So I'm telling you, so many trades. bought 5 calls. 155. Right here. Sold at 201. First one right here. Sold another one at 201. One at 203. Like right there. And then bought 5 more calls at 205. Oh yeah, this is when I got a little whipsawed. I think we're gonna break out. I thought we did break out. Bought 5 more, didn't break out. And then sold all of them. And I realized I was wrong. 206. And then bought puts. 207. This was the where I'm finding like, okay, in a range. The calls, if we don't break out, time to buy puts. If we don't break out to the downside, time to buy calls. So got 6 puts here, 207. And then sold one at 223 right here. So that was a nice one. Sold 2 more at 223. So yeah, sold 3 down there. Sold one at 226 right here. And then sold 2 more at 227 right there. So yeah, missed those final big moves. Mostly this one right here. But stayed stuck in its range. Got the bell, broke out up here, did little inverse head and shoulders out of the breakout. The head, a shoulder, boom. Yeah, a bull flag that finally broke out into close. SPY's closing up 0.5%. We got an inverse head and shoulders on the hourly. I think we're bullish. Bullish for some more ups. Barbecue's down 17% at 8 cents. GME did 1.28% today to the upside. AMC's up 7%. Retested that resistance up there. Today I picked up GNS shares and then just traded SPY. I think is pretty much all I did. So thanks so much for your support, guys. Thanks, Guts, for the donos. Thank you for the membership. Congratulations to psych you up. Rad up good news. Rad is not going anywhere. Down 33% today. Are they actually filing now? Prep to close hundreds of stores. Are you shorting Rad Guts? All in up 5%. All in, yeah, that could still look good. OEVs are up a little bit. Not a bad support bounce on GoEV actually. All the Barbies I bought. Thanks Kitty Daddy, thanks Guts, thanks Busy Bee, thanks Psych You Up, thanks Shay from the Bay, thanks Bubba, thanks. We'll see you guys on Discord.